is a limit in terms of how high we raise rates. Where's the compass?
I'm glad you bring this up. What we're going to do, folks, now is really address the path here that we have not only the economic data today, but also the path to get to September 21, which is, November 2nd, which is not all that far away. At the IMF meetings in Washington, the one name that kept coming up was Brainerd. Lyle Brainerd. John Lipsky was at Wesleyan, way ahead of Lyle Brainerd. Remembers the first time he met her, and that she was absolutely unique. And I think of the names that you mentioned, Lisa, you do a great job of this every day. McKee owns the high ground on interviewing them. I really wonder if the only voice that matters right now is the vice chairman.
I wonder if that's the case, and her voice has been decidedly a little bit more dovish than, say, Neil Kashkari, and yet the numbers are showing they keep coming in hotter than expected. And Kayleigh, to your point, these consumer companies able to pass along price increases, Olaplex and their $80 shampoo notwithstanding, it signifies this has more to go.
Let's do this right now. Lindsay Pieggs was with us. We've had some technical challenges, and the chief economist at Stifel joins us this morning. Lindsay, as we vamped to get you set up for us, we ended up talking about the Fed and the importance of Lyle Brainerd. Explain to our audience worldwide the importance of a gentle lady from Wesleyan.
Well, I think she does hold a specifically important role in terms of tempering expectations. While we have heard opinions drive significantly higher to the more hawkish side, she does seem to offer a signal to the market. She says the Fed is looking at inflation. There's still more to be done, but there's also a need to, at some point, pause and assess earlier policy decisions. And that's quite a stark contrast to what we hear specifically from Neil Kashkari out of Minneapolis, saying there's essentially no ceiling to where rates could potentially go as inflation continues to push higher, which sends a more volatile message, a scarier message to the marketplace.
Well, and maybe that's by intention, right? Maybe that's because he's looking at the stock market and saying the more that you see some sort of sell-off continue and the more you see yields climb, the more they will achieve their goal more quickly. So this could be some messaging. I do wonder, though, if you take a look at his message, he's saying if core inflation continues to accelerate, then perhaps they're not going to stop at 4.75%. What are the chances, in your view, that core inflation will not peak by the end of this year?
Oh, I certainly don't think his message is unjustified, particularly against the backdrop of the latest core CPI number now pushing back to a cycle peak, a new cycle peak at 6.6%. And I think this underscores the idea that the risk to inflation is still to the upside. So the notion that inflation will just nicely and calmly materially decline to the Fed's 2% target over the coming 12 to 18 months, allowing the Fed then to not only reach that terminal rate near term, but begin to cut rates potentially by the end of next year. I think this highlights the overly optimistic sentiment baked into the Fed's forecast. And to Kashkari's point, if inflation continues to rise or even remain elevated at these new levels, the Fed is going to have to take a markedly more aggressive pace or pathway to get inflation under control. So when we talk about have we seen peak levels of inflation, that matters less than the question of will inflation remain elevated beyond the timeline that the Fed is anticipating in order to get to a more reasonable terminal level. And Kashkari says, well, maybe not. And I tend to agree with him because inflation has shown such a persistence, such a stickiness in the numbers, particularly in the service numbers.
Yeah.
I think it is too early to say we're on the downside from here.
And even on the good side, and this is something that has been honestly keeping me up at night, the diesel prices, the diesel gas, given that prices have remained so elevated, storage levels are so low, and that this is pivotal for everything that we transport, for everything that we do, particularly with heating homes. How concerned are you about an inflationary impulse heading into year end from diesel prices that continue to climb despite some of the SPR releases of gasoline, despite some of the other issues done to drive down costs in other places?
Oh, I'm absolutely concerned. And you're right. A lot of the headlines seem to be misguided by the slight decline that we've seen in terms of gasoline prices for the average consumer. And certainly from a headline perspective, that's what the average American focuses on, what they're filling their car up with at the pump. But to your point, when we go to the grocery store and we buy goods and we're purchasing services across the economy, one of the biggest input costs is those transportation costs. And as diesel costs rise, as labor costs rise, as parts of materials costs rise, all of these factors are going in to a higher level of prices that is being forced onto businesses.
Well, Lindsay, to that point, we are seeing these companies passing on those higher input costs, exercising pricing power, just raising prices for the consumer. And we're seeing with companies like Nestle that their consumers are tolerating that. How problematic is the retention of profit for corporations for the Federal Reserve?
Well, keep in mind that consumers, yes, are tolerating it, but that doesn't mean that it's not causing pain or causing a change in behavior. Already, we've seen a precipitous nominal decline in terms of consumer activity, flowing from about 8% last year to just about 2% this year. So some consumers are nominally reducing the amount of goods and services in their basket. For other consumers, they're reducing the quality or the price point of the goods and services that they're purchasing. So maybe they're not purchasing Pantene or the Olaplex shampoo, and they're getting Walgreens brand shampoo.
Oh, no, she went there.
And for other consumers, this means that there may be foregoing purchases for 1 or 2 months in order to buy a larger ticket purchase in month 3 or 4. But regardless of the form that it's taking, consumers are changing their behaviors, which should be a red flag for businesses that continue to try to pass on 100% of the cost increases to the consumer.
I mean, there's no downside to Lindsay Piegza. She's such a social foundation. She's on the Olaflex story. Like, what other economist in the world's doing that?
Yeah, that's what people are focused on. They're focused on Olaplex. Do you use Olaplex, Lindsay?
Yeah, unfortunately, $80 a bottle is beyond my budget.
Okay, well, talk to your derivatives trader, Lindsay. Thank you so much. Greatly appreciate it. With Stifel this morning. Really brilliant there on the Fed. Of course, the firestorm of response we got this morning is on Irish Spring.
Oh, Irish Spring, yes.
I remember when it came out with these silly TV, it's Colgate-Palmolive. They invented $1 billion brand out of nowhere. I think I was in college at the time. And they came out with these ridiculous ads that were literally campy the first day they came out. And now they have all these different, they vamped the brand out to charcoal this and hemp that. And Anthony emails, and thank you, Anthony, for watching. It's really important that we know too much information. Anthony, the only soap he uses. Thank you.
Single bar of soap in the shower.
Body wash for men, $4.99.
There you go. The anti-Olaflex.
Yeah.
Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The European Union is set to propose sanctioning 3 Iranian generals and 1 business for providing military support to Russia in its war against Ukraine and their involvement in providing Moscow with drones. The targeted business is responsible for the Iranian drones that have been supplied to Russia, the generals involved in Iran's cooperation with the Kremlin. Soaring food prices drove UK inflation back into double digits in September, intensifying pressure on the government and central bank to act. The Consumer Price Index, it rose 10.1% last month from 9.9% the month before. That's according to the Office for National Statistics. Now that matched a 40-year high reached in July. Mitsubishi UFJ Financial Group is said to be evaluating an acquisition of some loan portfolios from Credit Suisse to expand its U.S. business. Japan's biggest lender is also vetting bundles of the Swiss bank's global loan in various sectors. Credit Suisse is racing to raise funds with just over a week to go until the unveiling of a critical turnaround plan. The global smartphone market has its worst third quarter since 2014. This as economic headwinds push consumers to delay discretionary purchases like personal electronics. Shipments of smartphones around the world fell 9% in the 3 months ended September, extending a decline that's lasted for all of 2022, according to market firm Canalys. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Strong enough to stay, we will never.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
The core services inflation, which is the stickiest of all, keeps climbing. And we kept getting surprised on the upside. We don't see progress in underlying inflation or core inflation. I don't see why I would advocate stopping at 4.5 or 4.75 or something like that.
Neil Kashkari of the Minneapolis Fed, one of my favorite people, always interesting, as Lisa mentioned earlier, entertaining as well. For those of you on radio, it looked like he was giving a Fed discussion at a wedding reception. I mean,
totally. Maybe it was.
The bride is beautiful, but
let's talk about inflation.
Very quickly, Lisa, what is the Kashkari distinction right now?
Well, the Kashkari distinction is that he is very concerned about the fact that we have overwhelmed expectations time and again for the CPI print. And it's also, I believe that he uses Irish Spring. He phoned in and said, he said, I'm gonna stay away from inflation and head for the 4.99.
We're gonna keep going on this morning. We're gonna keep going on the Fed speak as well. Bullard of St. Louis with our Kathleen Hayes. Really looking forward to that at 3:30 this afternoon. That's actually a very important discussion along the x-axis as we have a Bullard-like regime change at this moment. On the markets, we had green on the screen, really quite nice. Back to red and green on the screen. There's some volatility out there where the VIX actually elevated back to a 31 level, 10-year yield 4.07%. We're buttressed up against new highs in the 10-year yield, 4.49%. In the 2-year, I'm looking at some curve, flatness now, 43 basis points of inversion. But the headline for me, Lisa, is the real yield, 1.65%, breaking through the 161 level. My average pre-great financial crisis is about 2.05.
You know, I keep having your voice in my head, and it's a little disturbing. It's about inflation, stupid. It's about inflation, and we're coming in. It's about 3 weeks until this election, and it's about inflation, and it's about the economy, and that's it. That's front and center, which is the reason why you're getting all sorts of things. So we want to reset and get a sense of what this election is going to look like. We have 3 weeks. Mohammed Yunus has been tracking this all from Gallup. He is the editor-in-chief there. Mohammed, what are you looking for in terms of turnout, in terms of excitement around an election where we really have seen the odds shift pretty dramatically, whipsaw over the past few weeks?
The number one issue voters have in mind when they vote, and we know this from generations, is the economy. We also see that in our data. 40% of Americans now mention the economy or some sort of reference to inflation as the number one problem, most important problem facing the country. So that is going to be front and center more than anything. In terms of turnout, we've certainly seen higher than average turnout last we checked. We're actually in the field checking that now, but it wasn't as high as we saw with the fervor we saw 2 years ago. The social issues are certainly going to be critical in some of these contests, but overwhelmingly, the economy is going to be central on people's minds as they go to vote.
I've got, Mohammed, 159 million, which is a ginormous number for the 2020 election. I don't have the midterm statistic of 2018. What do you people see on the turnout of America for this election?
It's still too early to tell.
You don't
really,
know,
Tom.
Interesting.
We don't know, and I don't think anybody really knows for a series of reasons. We certainly ask Americans, are you planning to vote? Are you more excited to vote this time than in previous elections? That metric is tracking higher than average, but certainly not as high as we saw 2 years ago. It's about 10 points lower than that. We're actually asking that again this month, but as we get closer to the election, there are a lot of factors that play into making this one really hard to guess turnout. First of all, people's voting habits have changed. Second of all, people's attitudes about voter laws have changed. People want to really open the doors to make it easier for people to vote. Most Americans support voter ID, for example, to have people vote, but they also support a series of other measures that make it easier for people to vote. So in addition to excitement to vote, there are also structural changes to the way we vote in America that are going to continue to roll out for these next several elections.
Well, Mohammed, when we talk about excitement to vote, there were a number of social issues that the thought was would be a galvanizing force in these elections, one of them being abortion rights. Is that taking shape? Does it have as much firepower as initially thought several months ago when Roe v. Wade was overturned?
We certainly have seen an uptick in people saying that it's important for them as a voter to vote for someone who shares their view on abortion. Now it's about 52% of Americans hold that view, and that is a relative high compared to before. However, it's only really about a 10 or 11 point jump from before the Roe v. Wade overturned decision was leaked out. So it hasn't exploded, but it certainly has risen in terms of being an important issue.
Right.
One of the things we were talking about at the break is everybody voting is thinking about inflation because we're all impacted by it. Not everybody voting is voting somewhere where abortion is really on the ballot.
Mohammed, I want to go to the heritage of Gallup back to the 1930s. You guys basically invented the industry, and you have a monitor and a body of knowledge about, say, that evening when LBJ stepped aside. What do presidents do the evening or the day after a midterm election?
Well, most incumbents usually don't do great in a midterm election. It's always an uphill battle, no matter who the president is. So President Biden is not facing an easy route. However, these social issues and some of these other factors may play a role in really helping the Democrats not fare as poorly. The other thing we're not talking about, which is more important than any of this, is the jurisdictions and how districts are managed throughout the United States, and what seats are really at stake between Republicans and Democrats. And Democrats are really facing a huge challenge just in terms of the seats that are up for grabs.
Mohammed, thank you so much. Mohammed Yunus, definitive, as editor-in-chief at Gallup here as we move to the election. And of course, David Weston leading our coverage here of a most interesting Tuesday evening. Alan Ruskin, publishing moments ago at Deutsche Bank. He and I have done FX for years. Lisa, it's a short note, but that means it's always interesting, on the nature of the money coming into America. And Ruskin says this time is different. The inflows into America, the nature of them are more balanced. They're not tactical races to short-term paper. And he says that speaks to a dollar renaissance, to a more resilient dollar.
This idea that it's not just positioning, right? It's not because people are moving into derivatives to hedge some sort of bet. This is people making a longer-term bet that the dollar is going to be the place to hide out because the U.S. economy is going to weather the storm better than others. Although we still wonder, at what point does something else break? We are getting Procter & Gamble results, for example. We've seen from company after company, Tom. Yeah, they are seeing full-year earnings per share at the low end of guidance because of the dollar and Forex impact. So this exactly speaks to that point. So at what point does it become a problem for the United States in a way that the Federal Reserve can't ignore?
And Kaylee, this goes back to revenue, folks, as being about unit and price. Procter & Gamble organic sales will be substantially lower for the remainder of the fiscal year as price increases slow. That's a wow headline.
Yep, and that dollar impact is going to be showing up in a lot more results, I reckon.
Right.
You saw it with Netflix after the bell yesterday as well.
We'll have to see. Procter & Gamble out. We'll dig into that and give you more in a bit. Futures, they go red, -1. Stay with us from New York. This is Bloomberg.
What are the moonshots at Amazon that are capturing most of your time and attention?
Well, you know, we have a unique way that we look at big new investments. And I'm not sure it's right or wrong. It just happens to be our way. And we ask ourselves when we're considering something 4 questions. We ask, if it's successful, can it be big and move the needle at Amazon? Is it being well served today? Do we have a differentiated approach? And do we have competence there? And if not, can we acquire quickly? If we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business.
When it comes to the stock, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued?
I have never tried to predict what the stock's going to do. And any time I've tried to a little bit, I've been wrong. I do really believe that in the short term, the stock market tends to be a voting machine. In the long term, it tends to be a weighing machine. We have a concept we talk about a lot at Amazon, inputs and outputs. You know, and the ultimate output for a company is share price. You know, and then other big outputs are free cash flow or profit or revenue. You can't really manage the outputs. You have to manage at the input level, and that's where we spend all our time. And so if you do the right things for the business long term, things tend to work out. I think we've had very good returns for investors, and I expect that to be true again.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
No one covers the world like Bloomberg.
Because Trussonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify quantify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
What you're going to see dominate over the next couple of months is volatility.
There's still work to be done, I think, before we can say this bear market's over.
Higher global interest rates, lower equity prices, and a stronger dollar, we think will continue into year-end.
I think people understand that if you're a longer-term investor, eventually the tide will turn.
There's so much fear out there, and it's been priced in, so I think we get this little bounce.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. November 2nd beckons, and worldwide what beckons is double-digit inflation. Kaylee Lyons in for John Farrow. He's giving a paper over in Scotland. Thrilled about that, and congratulations, John, on that. But Lisa, we got to go. I'm going to start out with, I'm sorry, UK 10.1% inflation matters in Washington.
The highest, matching the highest levels going back to 40 years. Again, yet another country coming out with higher than expected inflation. Higher than expected hits to consumer balance sheets. And this really ratchets up the pressure on central bankers saying, great, you guys have definitely raised rates. You got to do more.
And what's so important to me, surveillance correction in Washington. I was with the Netherlands central bank head, great guy. And I said, well, you know, it's 11% inflation in Netherlands. And he stopped me in the middle of the interview and said, no, it's 17%. Like we're losing perspective on double digit.
What does that mean?
Don't fall off the edge there.
It's okay. I'm trying to. Maybe I need something special for my hair. But I do think that we are looking at a scenario right now that has not been seen in years. And I keep going back to what Steve Rasciuto said yesterday of Mizuho. I thought that was actually somewhat stunning. And we heard the same kind of tone from Jerome Schneider of PIMCO, which is where we end up is probably closer to 2% than 0%. We're not going to go back to that 0% range. And if that's the case, how much are markets fooling themselves, pretending we're going to end up back where we started at a time when that does not seem likely given the protracted nature of some of this inflation?
And at this moment, with yen breaking out 149.60, we're going to focus on really important headlines from Procter & Gamble. We go to Cincinnati, and I'm sorry, Kaylee Lyons, these are jaw-dropping consumer product headlines about the consumer. And you know, I'm looking at 40 headlines, Kaylee, save me here. The bottom line is they're saying the inflation, organic revenue lift, it's over.
Well, the idea being that to this point, they have just raised their prices to combat the higher input costs they are facing. Now they're navigating their ability to continue doing that at a time when the American consumer spending power is deteriorating. And you see that show up in the results, but also showing up in the results to your point about the yen, Tom, and basically any G10 currency or any currency you're looking at is the strength of the dollar hits them on the top line when you have sales overseas. They're worth a lot less when you bring them back home. And I think we're going to see that dollar headwind really reverberating throughout earnings season.
I actually noticed a luxury item today. Usually it's a 2-3% haircut, and they're modeling 6% for one of the luxury companies. And of course, P&G is a multinational there. I mean, I'm sorry, Lisa, these headlines are really germane from Procter & Gamble. Consumers' willingness and ability to pay ever more for staples is coming to an end.
Well, it's coming to an end maybe, right? We're seeing the shares pop by more than 2% in pre-market trading. People still spending. They beat with respect to where their sales came in. People are willing to spend, but they are bringing less home and expect that to end. There is a feeling now it's still okay. What about in 6 months?
We're going to say, I want to do this. I want to go to London. Lizzie Burden is not with us right now. We've got Emily Rowland coming up. But these images are historic of a United Kingdom back to the beleaguered middle 70s. Chancellor Hunt sitting behind the Prime Minister. For those of you on radio, Ms. Truss has leaned over the desk. I've witnessed this personally a couple times, Lisa, and it's absolutely original for Americans.
Okay, so she's coming out and she's saying that she is sorry for mistakes in economic plans, saying that it's right to make changes to the economic approach. This comes after she basically saw her entire agenda reversed and absolutely abnegated, and it comes as her popularity rating is below 10%, Tom.
Yeah.
How do you really speak to a time when you have Kaylee at popularity that's that low?
And Kaylee, now the head of Labor, Sir Keir Starmer, speaking as well. You wonder what their response is going to be because we don't know when the general election is, which I still don't get.
Yeah, I wish John was here to explain the UK political beast. But to Lisa's point, it is a question of credibility of the government. We have seen U-turn upon U-turn in terms of some of these policies, but not all the way yet. They still have tens of billions of pounds worth of budget gap that they need to plug. So it is a question now, do they tax excess profits for banks and energy companies? I mean, there is still a lot of unironed out questions here, not to mention the fate of the Prime Minister herself.
We're going to monitor this. Lizzie Burden outside Parliament as well. Let me do the data check here quickly. Futures up 5, Dow futures up 14, the VIX 30.99 goes nowhere in this big equity lift. I do want to point out stronger dollar, not through to new highs on DXY, but there it is in yen, 149.64. All of global Wall Street watching yen.
And also watching the pound as Liz Truss speaks, hitting new intraday lows, 112.35, which we're also watching. Today, we're going to be listening to the Fed speak, which seems to be a daily grind. Minneapolis Fed President Neil Kashkari speaks again. St. Louis Fed President Jim Bullard speaks twice. Chicago Fed President Charlie Evans is also speaking. We're also getting the Beige Book at 2 p.m. Today, those earnings really are going to be front and focus. We did just get Procter & Gamble. They're being received well. There is this feeling of relief, but again, how much visibility do we have into the future? We heard after the bell yesterday, Netflix doing much better than expected, up more than 13% in pre-market. United Air as well. We get Tesla and IBM among others after the bell. 1:15 p.m. This may be the most important point of the day. President Biden speaking at 1:15 p.m. about what to do about energy prices. Some people would argue that the immediate concern for gasoline has gone off. Diesel front and center. He has pledged to potentially release more from the Strategic Petroleum Reserve. How much more can he do at this point? What's the trigger? What's the policy? What's the process? We're going to be speaking with Amos Hochstein later today.
Let's dive into it. Emily rolling with us now with a very sharp note with the John Hancock Investment Management Shop in Boston. Emily, thank you so much for joining. I love your note where you look at the quality of quality, whether it's in bonds or in equities, the nature of quality into the end of the year and next year. Do I need to buy quality or can I take more risk?
It's all about quality right now, John. And remarkably, there's been a big dislocation in the macroeconomic backdrop. Clearly, we're in a decelerating environment right now. And the market leadership to us just doesn't make a ton of sense. The S&P 500, of course, down in bear market territory. Quality down more. High-yield bonds outperforming the aggregate bond index. This is not the type of market leadership you see heading into a global recession. So we think that there's a nice opportunity here.
Did you see how she confused me with young Pharaoh?
Well, you guys look very similar.
Well,
It's
we're both
close.
John uses Olaplex as well, so I can see the confusion.
Emily, save us, please. There's an issue when you talk about leadership. What does that mean to you in terms of what the market is getting wrong, especially since the earnings are pretty good? Maybe the signal is being sent that is correct, that perhaps the markets have overreacted to recession risks.
Maybe. I mean, let's think about it this way. And Lisa, you made this point earlier. Q3 was fine. You know, you think about the economy, the leading indicators were still doing all right. You know, it was really just the end of the quarter where we started seeing some significant deterioration in the data. So we look at, you know, everything we've heard about the consumer in the third quarter, still willing to absorb higher prices. Netflix seeing more subscribers. Nestle saying that they're still able to pass along higher prices to consumers. But we're starting to see cracks in that story develop, whether it's something anecdotal, by which I mean on Twitter, which suggests that, you know, potentially vacation rental properties are starting to see really significant declines in occupancy rates. More traditional data like retail sales coming in flat. You know, forward guidance from some of these consumer staples companies indicating that consumers are starting to protest higher prices given the elevated cost of capital, given the persistent elevation of commodity prices. So I think the consumer, as we all know, is the workhorse of the U.S. economy, and I think we've got to watch some deterioration there.
Emily, to that point, if we are seeing the consumer pushback, if we're seeing the demand deterioration, arguably that's exactly what the Federal Reserve wants to see. So is something that's bad for corporate earnings, but possibly a positive when it comes to the tightness needed of monetary policy? What does that mean for the equity market? Is a bad thing then a good thing, or is it just a bad thing if it's earnings driven?
I know, right? It's good news, bad news, good news. It's tough to kind of parse that out right now, but certainly, you know, the Fed is probably, happy with the fact that, the equity market is showing a little bit of, challenge here this year. Financial conditions are tightening, but the problem is, how far is the Fed going to go? Their gloves are off in the fight against inflation. And I think the Fed's going to be able to get inflationary pressures to subside, but at what cost? What is going to happen here? They're going to be dealing with a much bigger problem next year.
Emily, you're out in Framingham giving a seminar, and somebody from the cheap seats goes, I'm down 28% in my bond portfolio. What do I do? How do you respond?
Tom, I did. I
You're
just said
killing
Tom.
it.
Sorry, Tom. Sorry.
Would you
I love
call
you
up?
both. I love
Would
you
you
both.
call up Colgate Palmolive and tell them I need the Irish Spring charcoal shampoo like Pharaoh uses?
Emily,
Continue, Emily.
So listen, you guys, this is the worst year in history for bonds. You have to go all the way back to, even going back to 1928. It has been absolutely brutal. But we don't think about bonds the same way we think about stocks. What do we all start to say when we're looking at stock bear markets? We want to start chipping away. Our favorite stocks are starting to look cheap. We don't ever talk about bond bear markets. They used to be like little koala bears, right? And now we've seen this grizzly bear of a bond bear market, and nobody's really flipping the script to talk about the fact that you're getting 5% on the aggregate bond index. We haven't been able to say that in over 10 years now. So look at that income, move up the capital structure, get paid to wait as this more challenging macro backdrop plays out.
Now, Susan, don't be a stranger. Thanks so much. Susan Rowland with John Hancock Investment
That's my mom's
Management.
name.
Thank you. That's your mom's name. I nailed that. Great. I just want to say,
Emily,
folks,
thank you.
I literally wish, folks, that we ran the wonderful commercials. Thank you to Scott Havens for making the place go. And we ran them down so everybody could see what we do in the commercial break. It is a firestorm of Girl Talk today on Olaplex. Every single guest that's come on knows about Olaplex.
Okay, let's be fair. How many are talking about Olaplex and how many are talking about Irish Spring?
Well, the same. I'll go with that.
That's the same? Is that male or female? Take a look at those ads from 1978.
Pharaoh, what's great about this, I wish John was here because Pharaoh uses number 3, number 4, and I think he uses number 5 in the Olaplex system. He uses it every day.
Really?
Yeah.
Really? You went there, didn't you?
I did. I went there.
Yeah, exactly. What are you doing?
You can't make
gave
this
him the
up.
look of disapproval.
Red and green on the screen. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Ukraine's military claims 13 drones made in Iran were shot down in the southern Mykolaiv region overnight. It happened as officials have reported more attacks against the country's infrastructure. President Biden's administration is pressing Congress for new authorities to speed up production and transfer weapons for Ukraine. Hong Kong Chief Executive John Lee has unveiled a plan to woo back foreign talent and ease housing woes. It's an attempt to revive the city's status as an international finance hub. Lee announced he would cut property duties for non-permanent residents and relax visa rules. Years of tough COVID-19 policies and political turmoil triggered a brain drain in the city. Nestle CEO Mark Schneider says inflationary pressures will continue into 2023. In an exclusive interview with Bloomberg, Schneider spoke about the company's effort to protect margins with price increases and the impact of energy costs in Europe.
What we're clearly seeing is some of the inflationary pressures continuing. So this is not over yet, and some of this will kind of go into 23. When exactly it's going to peak, I think a lot of that has to do, especially in Western Europe, with the energy situation, because that's a big driver of inflation.
Schneider remains bullish about the brand as demand is strong and sales are surging. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
To the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg. Power. Policy. Politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How do Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
Strong enough to stay, we will never.
We've seen a lot of headline ping pong from the UK, but I think at this point, given what we've seen in terms of the walking back of the budget, gilt volatility can come down, and we can see some of that stabilization in global term premium, which can allow the yield curve in the U.S. to go back to that flattening trend.
Kelsey Barrow, JP Morgan Asset Management. How about this, folks? Yield up, price down. That's the analysis you need to know.
Thanks.
And
Thanks,
you see
Tom.
it. Thank you. I nailed that. Lisa, you see in the
fantastic.
2-year yield today, 4.50%.
Yeah.
4.50 is not 4.49. There's a difference.
There is a difference. It's
Yeah.
breaking through, and you're seeing it throughout the entire curve. Where is the finish line when you've got likes of Neil Kashkari saying, we're not done yet, and we could be quite far.
Quite serious, actually, is a moment in British history. Let us wade in here with members of the House of Commons. Remember, the green leather is the House of Commons. Here is the Prime Minister of the United Kingdom, quickly.
Have caused chaos in the markets and wrecked the economy.
Prime Minister.
Mr. Speaker, we do face very difficult economic times. I have been honest about the mistakes I have made. But what I don't apologise for is the fact that we have helped households through this winter, through the energy price guarantee, the fact that we've reversed the national insurance rise, and the fact we are taking action to get our railways running rather than being disrupted by the militant trade unions she supports.
John Barron.
Questions from the floor there as the Prime Minister speaks, and of course the Leader of Labour, Sir Keir Starmer, there as well. Lisa, as we go to Lizzie Burden, ITV News has it. It's all over Twitter right now. The gentleman from Labour, apparently it's going, oh no, it's on a book. It's a book is being written about Liz Truss's time in office. It's being written right now. Sir Keir says apparently it's going to be out by Christmas. Is that the release date or the title?
Well, and then there's Sir Starmer pointing out that Liz Truss made one promise about not having spending cuts for public spending, and that it just took a week for that to go away. He said, "What's the point of a prime minister whose promises don't even last a week?" I can say fairly, this has been a brutal session. Lizzie Burden has been tracking it over in Westminster, in London. What are you looking for here, given the lack of credibility, given how much pushback, Lizzie? Do we get a sense that there is nothing that Liz Truss can say to really make or break her tenure, that it's already over?
I mean, Lisa, she's been giving her the best performance she could possibly give. She was coming out fighting. I've heard that she's had extra rehearsals this week. The message that she wanted to deliver was that she's sorry, she's made mistakes, she's made changes, she's getting on with the job and delivering. But really, as you say, the damage has been done to people whose mortgages have already gone up, and many of our own MPs will have already made up their minds about her. We're hearing that lots of them have already put in letters to ask for her to go. And remember, former Minister Michael Gove, he said it's when, not if, she should go. And he wants a papal conclave to stick all the MPs in a room and send up a white flame when they're decided.
I'm sure, Lizzie, you'll be there to see the white smoke come out of the chimney. Lizzie, let me cut to the chase. What is the timing of people like Gove counting up letters? Is this about Thursday, Friday? Is it about into November? Is it about making it, as Sir Keir talks about, to Christmas?
It's all a grey area because Liz Truss is meant to be shielded for a year from a confidence vote. Graham Brady reportedly has had the usual threshold outside a year of letters already, and he needs to meet with the board of the 1922 Committee of Backbenchers to decide whether they want to raise the threshold to half of all Tory MPs from 15%. These decisions will happen perhaps this week. Jeremy Hunt, the Chancellor, is going to see and address the MPs of the 1922 committee later today. So it's all happening in hours and days, really. It depends how she does in this performance as well. And let me just say as well, it doesn't just matter about Starmer's questions, it's also how aggressive her own MPs are towards her, and you're hearing them questioning her now.
Well, and Lizzie, among the many things she has said in her answers is that she is committed to the triple lock on state pension payments, essentially making sure that the state pension is in line with inflation, which we learned today is 10.1% in the UK. Is Mr. Hunt going to be on board with that, or is she speaking out of turn here?
Well, who's in charge? It's not clear. Is it Jeremy Hunt or is it Liz Truss? The reason why this is even up for debate is because Jeremy Hunt needs to find £40 billion of savings to plug the fiscal hole. But everything's on the table except for defence and health. All the government departments have been asked to shave 15% off their budgets. So it's how are they meant to achieve growth when they're under such pressure? She says it's efficiency savings. We all know what that euphemism means in politics.
Lizzie, an unfair question to wrap up here, and I think it speaks to global Wall Street. Is the pension crisis in the United Kingdom all clear? The LDI crisis, can we say we've moved beyond that?
I'm never going to say that it's all clear because we don't know what market turmoil lies ahead that could bring us back to that situation. But the Bank of England does seem to be confident that these LDI funds have fortified themselves in the time when the BOE made that emergency intervention.
Lizzie, thank you so much. Lizzie Burden, outside Parliament this morning. This was sterling 112.36, fractionally down. I'm not going to say a big deal. Lisa, I'm looking at the 30-year bond as Governor Bailey looks at it from that 5.04% level down to an okay 4.19, but on a chart basis, really not breaking through to a new lower yield.
Right, although the fact that there hasn't been more disruption perhaps is a victory, considering that they pulled back their emergency plan to try to support some of the disruption that was caused by the LDI market, by the pensions. At the same time, they did push back by one day, just that they didn't compete with the budget, the quantitative tightening. They are going to go forward with this. Will that be viewed as a positive or as a mistake? And honestly, I'm not sure. I've seen both angles represented in some of the commentary overnight.
Well, they're going forward with it, but they're not touching the long end, right? They're not doing the 30 years. So is that a kind of compromise for Andrew Bailey? Is he trying to tread carefully here, but still ultimately retain that credibility by going forward with QT?
I just don't understand QT. It's a completely original thing, and I read about it, and to me, it's every, as Bremer would say, it's every bank for themselves, and they're literally making it up as they go, step by step.
How do you shrink a $9 trillion balance sheet, as the Federal Reserve is trying to do? And at what point does it create disruptions that perhaps people are not expecting to see?
Yeah.
And this goes to the liquidity of markets that we've seen a lot of disruption to.
7 basis points out in the 10-year yield on treasuries here, the 10-year yield touching I'm going to round it up. Why not? 4.10%.
Who are you?
These are numbers.
He does it out to 4 places. This is ridiculous.
Yeah,
I'm going to round up. This is a new
Wednesday.
Yeah, he's using Olaplex. I do think, though, that this is the reason why you're seeing the dollar continue to strengthen, right? Because people do see that rates are going up, and they see the Procter and the Gambles of the world that are coming out and are still beating estimates, even with the inflationary pressures, even with the strong dollar. Put every excuse in the world, they're still beating.
We do economics, we do finance investment. To me, the most important economic data of the morning is Procter & Gamble earnings. I thought those headlines were stunning, and really you wonder how all of the sell side comes back and recalibrates on pricing power of corporations. We priced from green on the screen down to red, negative 13 on futures. VIX 31.29. Stay with us with Kaylee Lines. This is Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leni Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Markets on the move, and good morning. Bloomberg surveillance on radio and television. We're having a lot of fun this morning, but guess what? Markets on the move for global Wall Street, and you see it in the 10-year real yield out 8 basis points, 1.67%. Again, my study is 2.05% pre-great financial crisis, and we are migrating there as we do with a 10-year yield 4.09%. We had a 450 on the 2-year yield moments ago. These are interesting markets. Green on the screen has become a little bit red. Negative 18 on futures today. What we're going to do in the equity brief this morning is we're going to move from, well, a show like on Netflix, a cut above, a story about a bankrupt salon, and then we're going to move on to Procter & Gamble, and then finally stagger to the story stock of the morning. Here to straighten my hair, Lisa Bramlett.
That was quite an intro. I mean,
Thank
we're
you.
moving
What
around.
do we got?
I did look up what Colgate-Palmolive, since they're the Irish Spring, what they're doing, and they're actually up, down, I should say, only 13% this year versus Olaplex, which is down by 66%. We'll get there. Netflix shares popping ahead of the open, up 12.4% here after reporting better than expected earnings, mostly also that they're not down in the dumps, they're not about to go bankrupt. I mean, that basically was the bar that they set for themselves, that user growth is not exactly shrinking anymore, and that this is great, but they definitely are seeing something that isn't as positive as it used to be.
I'm an amateur on this. 2 tiers. A lot of people buy the lower tier, so does their average money they take in from a given person come down?
Okay, this is a good point. They're lowering prices.
There?
Yes, it's good because they basically are saying, well, everybody and their children are using the same account, right? So how do we get more people to actually pay? And so if they lower prices, does that mean that their profits eventually go down? We're getting a repricing and sort of the disinflationary push of this. The other ones I'm looking at, Procter & Gamble. They came out with earnings this morning. We've been talking about it since.
Stunning
and it is stunning simply because you see inflation come in. You see the FX impact, the idea that the dollar is strong, their earnings from overseas are lower, and the pricing pressure is even greater for international customers, still beating. Still managing to come out and increase sales more than expected. What does that say about the consumer's resilience for now, even as they lower their full year guidance? And Olaplex, we've been talking about all morning because Kaylee Lines uses 3, 4, and 5 with some bonding mask to make herself
Every
feel
guest
good.
we've had on except Terry Weissman uses this stuff.
And evidently, Tom will too soon. And really the issue here is some of the darlings that grew up at a time of free money. At what point do you see a massive deflation that has a broader reach than just idiosyncratic potholes throughout the market?
Yeah,
And I think that that's an important
I'm going
point.
to editorialize here and say years ago there were roll-ups, and roll-ups were like specialty chemical. What would you do with American cyanamide if you spun it off? Are we going to have a zombie roll-up? I really wonder. Non-profitable.
Do they lower the price from $60 to $30? I'm just saying.
Kaylee Lines in for John Farrow today. We're thrilled you're with us, folks. $84 on West Texas, and Brent, $90 a barrel. Terry Weissman joins us now, global interest rate and currency strategist at Macquarie, and we have a raft of questions to go 2 hours with Dr. Weissman. Terry, I have got to talk this morning about what we see from Procter & Gamble, which is the effect of inflation. Corporations adjust, but there's a point where inflation hits a consumer and hits corporate America. It's off your remit, but is that where we are?
Yeah, look, I'm a bit surprised by the fact that a company selling consumer products with a very large materials cost base can do well in this environment. But then I also think, look, maybe the consumer's just not buying the salon shampoo, the high margin product, and maybe going a little bit downstream here, trying to get the lower price point product at a time when they're squeezed by their real wages coming down and higher mortgage payments on their home and all of this. So I'd rather look at this from a macro basis. Let's look at what the whole consumer product sector does. not just one company. That'll give us a better sense of where operating margins are in the economy when they come out.
Are we in a global recession? And I say that after seeing Atlanta GDP at a near 3% statistic. I mean, the United States is not participating in a global recession, right?
And technically, China isn't as well because it presumably is still growing, at least at the margin. The emerging markets are still growing. No, I think the recession we're seeing now is for the most part, a European recession. There's no surprise there. They are feeling the brunt of the energy crisis. Well, are we going to see a global recession? I think that the U.S. will join this recessionary crowd in the early part of 2023. I think it's just a matter of time that we start to see consumer spending come down in the other advanced economies that have not seen the recession yet, like Canada as well.
There's a theory that we're pricing in almost peak rates, that we're pricing in peak Fed hawkishness. We've heard this before, so it's dangerous to say this. But that sort of seems to be a feeling right now in markets. Have we fully priced in the ramifications of that? And at what point does that factor into the dollar and create weakness when higher rates cause lower growth?
So we will not see weakness in the dollar until the other economies start to do either as well or better than the U.S. in terms of their economic activity performance. Perhaps it doesn't have that much to do with rates after all, because in the final analysis, rates just follow growth. If you're doing very well, you're likely to have inflation. The central bank is likely to tighten. So let's go back to growth when we analyze FX and who's going to do well from that perspective. The U.S., to its credit, is still doing well. Now, it may go into a recession next year. We believe it will. But even if it does, it'll be a late recession. It may not be as strong as the recession we see in other advanced economies. And I think in that context, the U.S. dollar can continue to do okay.
I keep going back to this. Do you see 2% rates for the foreseeable future once we get past this era of 4.5% to 5% rates and then coming down, never again to that 0% bound?
I don't see 2% rates coming back anytime soon. And I think what we're speaking of now is not the drivers of inflation in the short term, like energy prices, for example, or with the tightness in the labor market. It has much to do with the structural trends in the U.S. economy and the structural trends in the global economy. Climate change, demographics are all, for example, and deglobalization. Let's put that one into the hopper too. Those are the big three mega trends that are likely to be inflationary over the long term.
Wait, so where do you see rates ending up?
Well, they're going to be in the real range, the positive real range, right? Which means that if inflation is running at 3% or 4%, it's very possible that nominal yields, nominal policy rates end up slightly above that and stay there for quite a while.
So is essentially what you're saying a 2% inflation target is no longer realistic for this post-COVID world?
Yeah, that's probably what I'm saying. I think, well, let's put it this way. The central banks have not subsumed into their thinking the long-term structural issues that are going to cause inflation to stay high. Once they do, then they may become more tight, right? They may stop at 4.75 next year. But it seems to me that after that, after a period of waiting, if you ask me what is the likelier move on the part of the Fed, to go down from there or to go up from there, it's probably to go up from there.
Why?
Well, again, because these structural trends are creating inflation. And I think that when the central banks realize that these are permanent and not semi-permanent or temporary, they're going to be realizing that it's going to be much more difficult to get to that 2% target, and therefore they may have to raise rates. Now, whether we get to 2% or not is going to depend on how much they raise those rates by. But I think there's going to be a rethink beyond the recession that has to do with the structural trends and not the cyclical trends.
At Bear Stearns years ago, you owned the high ground on Pacific Rim analysis. Now you do it for the Great Australian Bank. Give us the level of optimism you have on the Pacific Rim if China can extract itself from this COVID anti-science.
Well, if China can extract itself and begin to grow again, it's generally positive for the Pacific Rim. It's also positive for the Pacific Rim to some extent if the Western economies continue to disassociate themselves from China commercially. I think some economies in the Pacific Rim can do very well by way of capturing a lot of the economic activity that would otherwise go to China and the investment that would otherwise go to China in an environment where China were integrated with the global economy.
To steal from Steve Roach of Morgan Stanley legend, is this a labor arbitrage where in this COVID opportunity, Vietnam picks up marginal manufacturing?
Yeah, absolutely, and Latin America does too, and Mexico certainly does. In North America, perhaps Africa does too. Ultimately, it's not just Vietnam. It's a lot of countries that can benefit.
I look at this, and then it comes to the question of dollar supremacy. The Corb 101 here, Colb 101 rather, is you can't have an EM up unless you have dollar weakness. Do you need it as a precursor to emerging market success?
Used to be
dollar
that,
weakness.
Yeah, it used to be that case a lot more in the when I was following emerging markets and doing solely that. A lot of emerging markets had a lot of dollar debt on their books, both sovereign and corporate. But I think the emerging markets, to some extent, have learned from previous crises. They have de-dollarized their capital markets. They are relying much more on local financing.
Right.
They're supported by local financial institutions like pension funds, and therefore the strength in the dollar is not catastrophic. And we're seeing it, in fact, with the with how well some of the majors in Latin America are doing.
We just told your people you came with an entourage of 5 people. Half of them is family, folks. And he said to Terry Weissman, he's got to stay around until yen prints 150. What happens when yen prints 150?
Well, maybe you start to see some inflation in Japan, which is what they want to see. I don't think they'll necessarily see it as a disaster. The issue is how quickly it gets there and whether on the way there it causes some disruptions.
But come on, Terry. This was the talk of IMF off the mic. If we get a 150 yen, they intervene, they capitulate here, and they pop. We're opening at 129 or 127, whatever yen. How destabilizing is that yen strength that's theorized?
No, I don't think it's destabilizing. It's look, corporate operating margins in Japan need to go up. They need to pay their workers a little bit more. I think by way of a weaker yen, they're achieving some of that. We haven't seen any financial stresses so far that are directly caused by the weakness in the yen. We've seen the yen has in fact been the weakest of the currencies this year. We still haven't seen any stresses, so I wouldn't worry too much.
Terry Weissman, thank you so much for being with us. Terry Weissman of Macquarie. And really, Tom, what he was saying there was so important about this idea of where the real rate ends up. And this idea that we could end up with nominal rates above 2% for a long time, Fed funds rates, because of where inflation is something that has not been priced into markets and really counteracts some of this discussion about how it's too indebted and we can't handle that. And then basically saying it's what we're going to have to handle.
I look at this, Kaylee, as a return to what Terry Weissman and I grew up with, and somehow we survive. But with that, you clear markets and the zombie companies. We make jokes about it, but I'm sorry. All of these nonprofit entities have to live in a new world.
Yep. Tom King growing up and surviving on Irish Spring, right?
Well, that back then, the real yield was 4%. Well, seriously, when Irish Spring came
was
out,
99 cents.
up to Volcker was 14% treasuries. I mean, that's all there is to it. Futures at -17. Stay with us. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russian President Vladimir Putin is set to hold a meeting of his Security Council to discuss migration issues as Russian occupation officials called on residents of Kherson to evacuate, warning of an impending Ukrainian offensive. The head of the Russian Kuril region said pro-Kremlin officials were evacuating from the main city, but vowed Moscow's forces would keep fighting. Mitsubishi UFJ Financial Group is said to be evaluating an acquisition of some loan portfolios from Credit Suisse to expand its U.S. business. Japan's biggest lender is also vetting bundles of the Swiss bank's global loans in various sectors. Credit Suisse is racing to raise funds with just over a week to go until an unveiling of a critical turnaround plan. The global smartphone market had its worst third quarter since 2014 as economic headwinds pushed consumers to delay discretionary purchases like personal electronics. Shipments of smartphones around the world fell 9% in the 3 months ended September, extending a decline that's lasted for all of 2022. That's according to market research firm Canalys. NFL football coming back to Black Friday. The National Football League has struck a deal with Amazon to stream a game on the Friday after Thanksgiving in 2023. The league and Amazon say the plan is for it to become a permanent fixture. The deal deepens a partnership between the two, which this season started streaming the league's Thursday night football franchise. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Big picture, we still have growth that's going to be slowing over the next 3 to 6 months. We still have a lot of monetary policy tightening ahead of us. So I think the way to think about this is a bear market rally. It's short, it's sharp, it still matters, but the big picture hasn't changed, and there's still work to be done, I think, before we can say this bear market's over.
Andrew Sheets, Brown University with Morgan Stanley there, just always brilliant, and really was quite prescient yesterday about Mike Wilson with a little bit, let's cover that quickly here. Mike Wilson with a little bit of a turn, right?
Well, he was
bearish to less bearish?
Well, in the near term and then more bearish in the long term. So this is the whole idea of a bear market rally and where we're headed at a time when people basically are like, I guess earnings aren't so bad, and then they get slammed with, well, maybe they are.
Coming up later this morning, a piercing conversation with one of the brightest lights at 1600 Pennsylvania Avenue. Amos Hochstein will join us here, the Special Presidential Coordinator for Global Infrastructure and Energy and Security. Looking forward to that again this morning. Right now, we do better than Mr. Hochstein with Will Kennedy, Senior Executive Editor for Energy and Commodities at Bloomberg, in New York with his world-famous team. Let's start with Javier Blas on the Strategic Political Reserve, and it's wrapped around the politics and all that. Javier suggests to me in a typical Blasian message I don't understand that we're selling oil now into the market to make the price go down, except both Republicans and Democrats have us buying oil back actually pretty soon. Is it that confusing?
It is confusing, and I think that there are mixed signals here. They are selling some more oil now. They're saying they might release a lot more barrels over the winter to keep prices subdued, and then there are mandated sales for years to come. So there's a lot of plans to sell the oil, and then they're saying that we'll buy it back at a price range around $70. So it is confusing about what's going on. What's clear is, as you say, the SPR has become extremely political, and the administration is very willing to use it in a way that previous administrations haven't been.
And we've been talking about this, and John's been talking about this extensively, about how vulnerable this makes us heading into the winter months. And I'm not looking at gasoline, I'm looking at diesel, and I'm focusing on how low those barrels really are. And this question of what the administration could do about that, because that goes into everything. That's trucker, expenses, et cetera. So what's the proposal there? How much is that on their radar?
So the SPR, in some sense, is a little bit of a red herring because it's crude oil, but the tightness in the market is not crude oil right now. As you say, Lisa, it's absolutely diesel. Stocks are at the lowest we've seen in decades, and that's just as people are getting ready to fire up their central heating in the northeast US, where they use heating oil, diesel, to heat their homes. So it's a critical situation, and there is a very small reserve, but there's no strategic reserve for diesel like there is in crude. So that's why export restrictions actually remain on the table, and there is an active debate in the administration about whether they should limit the export of diesel to Europe, which has been buying a lot of US products.
So what does that do politically?
Well, politically, it's
What's it mean for Liz Truss?
Well, no, that's a serious question, Tom, because Europe is being helped by US energy exports on a huge scale. That's LNG, that's diesel, and if the administration decides to restrict those exports for political reasons at home, that will drive up prices in Europe, where diesel is already also very, very short, and we've had a refinery strike in France, which has constrained supplies of diesel. So this diesel tightness is a problem on both sides of the Atlantic, so acting here will be a problem for the administration's partners in Europe.
Okay, so tightness of supply driving oil prices up. And Will, you mentioned how there is a plan in theory to buy oil back and shore up those reserves once again, which are at multi-decade lows. If the administration says it's going to buy between $67 and $72 a barrel on WTI, we're already down 33% from the highs, and yet we are still nowhere near that level. And when you have OPEC reducing supply, constraining supply more, is it realistic to think we're going to get there anytime soon?
Well, predicting the oil price is impossible, and I would just say that we're only a few years away from negative oil prices, so we just don't know. But I think it's certainly true that there's a real tug of war going on here, and they're setting a floor with that buyback range. OPEC has signaled the desire to defend prices at sort of the $90 range. So what's fascinating about this, I say again, is it's extremely political. You've got people using policy both on the consumer side here on the US and the producer side, and it's become a real tug of war.
Well, and we know that the administration had been pushing for OPEC to do something else, which they did not do. So again, speaks to the political difficulty. At the same time, they've also asked producers back home to pump more oil. And yet it isn't so much the pumping of the oil, it's the refining capacity. You need to be able to turn it into product. What policy solutions are there to solve that problem?
No, that is a huge problem, and we're not going to be building any refineries anytime soon. But the reason refining capacity is so tight is, again, goes back to the situation in Europe. The global system used Russia's overcapacity in refining. Russia has a big refining system, and they exported a lot of diesel. Europe is moving to a place where it won't buy that diesel anymore as of early next year, and that's all putting pressure on the system. And people always focus on crude oil, but it's really on the refining system, the supply of products, which a lot of the stresses are showing up right now.
So what could this administration do? We're going to be speaking with Amos Hochstein coming up, as Tom was saying. What can they actually do other than just make broad proclamations to try to make them look like they're doing something 3 weeks before the election?
Well, I think we need to press him on export restrictions. Now, someone did say yesterday that they're not going to do that before the midterm elections. But if things get very tight over the winter, it seems that clearly is on the table.
Javier Blas gets all the headlines with his wonderful book, The World for Sale. But the fact is, Stuart Wallace, Justin Kerrigan, and you invented the world-class hydrocarbons team here. And what's great is he just sold the movie rights, which I thought was great. And I just heard that Colin Firth is scheduled to play you in the movie, which is, I think, really looks good. I want to ask you, within your team of 40, 50 people, is the United States energy independent?
No.
Why do you say no after all the political garbage I hear out of Washington?
Because this is a global energy system. The US imports oil from around the world. It exports oil to, it exports products it is a global system, and I think you'll never be in a place where you're insulated from that, where you can have a truly independent policy. I just don't think that's realistic. And the shale industry, one of the key questions for energy going forward is what is the future of the US shale industry? Clearly, the rise of shale has been the most enormous energy story in the last decade or slightly more. But people are starting to worry that it's slowing down. The administration revised down its estimates for US oil production in the last week or so. Yeah. And some people are saying that production might peak within the next 2 years. Now, that's a bold call. We'll see. Yeah. But I think as we look forward on oil, on energy, on US energy independence, the future of shale is really going to be a critical question.
Will Kennedy, thank you so much, and thank you for the once a week, twice a week effort here from London to give us wisdom on it. Well, I'm sorry, Lisa, this is a huge deal. This energy independence thing, it's incredibly emotional in Washington.
A lot of people have been talking about peak shale just simply because they cannot invest and get the same kinds of returns at the same prices, and that's what you're seeing with a lack of a lot of the same kinds of production from some of these wells.
Will Kennedy with us to give me the right questions for Amos Hochstein. He's Special Presidential Coordinator for Global Infrastructure and Energy. Sir, he's oil czar for President Biden, and he will join us here in a bit. Futures in -17. Good morning.
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
Those numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg. To the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
That's a question I get all night.
Bloomberg. Top experts. Great questions. No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
A lot of factors are putting us back into a more traditional 1970s, 80s, and early 90s mindset.
Big picture, we still have growth that's going to be slowing.
We do think that we are going to see peak rates. We do think that we are going to see peak inflation.
I think we still have a small chance of a soft landing. I don't think we get it.
When you tighten financial conditions this aggressively, this abruptly, things are going to break.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Welcome back. Good morning. Stocks flipping and flopping as they balance some of the better than expected earnings with rates sending a clear message: inflation higher for longer. Tom Keene, Lisa Abramowitz, and Kaylee Lyons here. John Farrow off. He is not playing footsie with the Dow. Tom, he is off on a well-earned vacation. As we try to parse through the noise, rates higher, 10-year yields. This is catching my notice. 10-year yields in the U.S., the highest levels going back to 2008.
It's deceptive here on a Wednesday. It's supposed to be quiet, and there's not that much economic data. All the talk to me is right where you are, Lisa, which is in the yield space. And I go to the real yield, as we heard from Terry Weissman earlier. It's important. 1.66% is not a negative 1% of ages ago.
Inflation keeps surprising to the upside. And to me, this is the big takeaway for the past couple of weeks, not just in the U.S., in the United Kingdom, around the world. And Tom, we're looking at this and you're saying, where are we going to end up? We are not going to end up back at zero. And that has to be a complete reset for companies, not necessarily in this quarter, but in quarters to come.
Okay, so this morning across global Wall Street, they're going to have their first meeting to do their year-end review, their first look at 2023.
Good luck with that.
Good luck with that. What
Exactly.
I'm sorry. I give up.
Well, where's the visibility? And Kaylee, that really speaks to some of the earnings that we're getting with Procter & Gamble really front and center. We've been talking about it all morning, but it highlights the fact that consumer-facing companies dealing with all the industrial headwinds still doing okay for now.
For now is the operative phrase there, because they also lowered their full year guidance because they're looking ahead and saying, yes, we've been able to exercise this pricing power, raise prices for the consumer, pass on those higher input costs. The consumer is starting to change behavior a little bit at the margin, even if it's just buying the cheaper alternatives. So it's a question of how long that pricing power is going to be able to get these companies through. And if we're actually going to start seeing that material margin pressure that you've had the likes of Mike Wilson at Morgan Stanley warning is coming, we just aren't necessarily seeing it showing up yet in the third quarter results.
Tom, you were talking about writing your Wall Street review for 2023. The Tom Keene one is going to be really interesting. I look forward to that next week. But I am wondering whether companies can write that either, right? I mean, to that point, what visibility they have at a time of such quickly changing winds.
There aren't go, folks, with all the blur of earnings that we see, and of course our Bloomberg focus on bank earnings, what we saw from Procter & Gamble today is a huge, huge deal to the late, great Jack Welch and his focus on pricing power. This is the first nuance. You nailed the microeconomics of this, Kaylee, earlier, between unit dynamics and price dynamics. Something's changed.
And what's changing right now is the Fed and the Fed speak, which we're going to get. I keep going to Neil Kashkari. He doesn't necessarily represent the mainstream. He's not necessarily Lael Brainerd. However, coming out, Kaylee, and saying 4.75% may not be anywhere close to the peak, moving closer to Bill Dudley.
Right. He is now one of the most hawkish members of the Federal Reserve rather than the most dovish, essentially saying if you're still seeing that acceleration in core inflation, we're not going to be able to stop at 4.5%. And that's why I thought what Terry Weissman told us in the last hour was so interesting. He's saying even if they pause at 4% for some time, he thinks it's more likely that they go higher than that after the fact rather than cutting, because we are just in a different inflationary environment now in which a lot of this is going to be more structural. He thinks 2% is no longer a target for the world we live in.
And right now, Tom, looking at just what the markets are showing us, it's just we were positive and they flipped negative pretty sharply heading into this hour. And part of this, to me, has to do with some of the gloom that we're hearing about what could potentially come down the pike and this feeling of what rates do, what higher rates do. We're seeing it down 0.5% right now.
The rates are leading the story today, but foreign exchange follows behind. And I'm sorry, I'm on intervention watch. A 149.67. There's a persistency. There's almost an inertial force to Japanese weakness that, you follow it all day? No. Do you keep your eye on it? At least you do.
Sure, and there's a persistency of the euro weakness, which continues versus the dollar, and this comes as Italian 10-year yields continue to surge some of the nearest highs. How much does this put pressure on what we're seeing with the ECB? It's really important, though, to understand the 60-40, and I think that we keep going back to that, right? Where is the ballast? Well, that didn't work out this year. I think it's been the worst year going back decades, but what will work as the ballast? Unwitty Bahugana joins us now. She's head of multi-asset strategy at Columbia Threadneedle. And Unwitty, what will be the ballast going forward if we don't get some stability in rates in the near term?
Thanks for having me, Lisa. Yeah, I think 60-40 has been a bust this year, for sure. But I think a lot of the conversation around these days has been about Fed watching. And you all nailed it when you talked about real yields. So real yields stability is going to be the ballast. But I keep coming back to what does stabilize real yields? And for that, we keep going back to inflation data. And we just haven't seen any signs of peak in that. There are hints, there are forward-looking metrics. If you look at sort of inflation expectations as measured in the bond market, those have come down quite sharply, but they're not at levels where one can say we can declare victory now.
What's so important here is the heritage of Columbia Threadneedle in England, and your roll-up of BMO, and the idea that Ted Truscott, your leader, is from Scudder Stevens. It's the Boston heritage of mutual funds. Lisa mentions the debacle of 60-40. Do you invest now assuming 60-40 stability forward, or do you have to invest with a different calculation?
I think I'll break that down, Tom, into two parts. So if I look at all my strategic forecasts for the medium term, they are better than I've ever seen in 10 years. 10 years ago, when we were looking at what fixed income might return for us, we were looking at 0 yields on the safer bonds and 2 or 3% on the riskier part of the 10-year. Now we're looking at 10-year at 4%. And you don't even have to take a whole lot of risks to go up to short duration IG and get 5-6% in a very safe, sort of risk-free equity bond portfolio. And similarly, I don't think equities are cheap.
Right.
Equities are probably fairly valued given the amount of uncertainty we have. But again, if you look at the medium-term projections, they're looking much better.
What is so critical here is everybody's been blown up in this unique pandemic-induced bear market. Are we going on to something new, or to revisit the giant pioneer Phil Carret and a way to invest that we knew decades ago?
I think we won't know whether we are going to something new until after the fact. So these structural changes.
She sounds like was that Kashkari?
Carry on, please.
So we do, I think that's a very important question, Tom. We do grapple with, is this a new structural regime for inflation?
Exactly.
To your question, does inflation stay around 3-4%? And we don't know that. So you could have theories that deglobalization and whatnot is going to keep inflation high forever. But for the moment, I haven't seen enough evidence that there's been any sort of break in the way things function. Yes, we're going through a painful period in the markets. I'm living it every day. But I think if we have a medium-term perspective, then you stay the course, stay the strategic allocation that you have in mind, and do not panic when that 60-40 is already down 25%.
Okay, so you're looking out over the medium term. In the more near term, though, I'm wondering how you're viewing political risk, because we've seen what happened in the UK, what is still ongoing in the UK, frankly. The questions Liz Truss has been getting as Prime Minister in Parliament this morning, and we're just 3 weeks out from the midterms here in the US. I mean, is it time to be thinking more about domestic political risk rather than broader global monetary policy and geopolitics, as we've been talking about for this entire year thus far?
Absolutely, Kaylee. That's an excellent question. So no one's been talking about the political risk here in the U.S. You saw how the LDI market, the bond market, reacted in UK when the market did not like the fiscal plan that came out of that administration. Here, I think all the data that I'm looking at, all the opinion polls I'm looking at right now is saying that we're likely to have a divided government for the next 2 years. So I think the market can live with that. But if we see a sweep in one direction, and at this point it means sweep in the Democratic direction, what sort of fiscal policies come through and how does the market react to that is a key risk at this point.
Anwadi, thank you so much for being with us. Anwadi Bahugna, thank you so much, of Columbia Threadneedle. And to that political question, one thing that we keep hearing, Kaylee, exactly to the UK risk point in some of the upcoming debates has been reducing the deficit. We heard that from Senator Warner just yesterday.
Well, he basically admitted that the size of the fiscal stimulus was a bit too large in hindsight, that the U.S. did too much. And to Anwadi's point, it becomes a question of, is it a bad thing to see the status quo in that it would mean potentially more spending that, in theory, if you had a divided government, it wouldn't be able to make its way through?
And Tom, you've been out front, the 3%, the Adam Posen type, where are we going to allow inflation to stay?
Yeah.
And it might not be within even the realm of control, right? What if there are some of these stickier kinds of aspects to the regime that we're in that lasts longer than perhaps we can tolerate, say, 5% rates?
In Washington, nobody talked about this on camera. Everybody talked about it off camera. And there's some form of hoped glide path, which has not occurred in the last 90 days, of a lesser inflation, maybe with kinks or pauses along the way to what? And what's important is I'm not even sure right now the what is 3%, the Posen statistic, or Blanchard's framed 4% years ago. Maybe it's 5% just to get there.
And it's the political question of how much pushback this Federal Reserve gets as it continues to raise rates, and we have the crimping, particularly in the lower deciles, to use your phrase that you've been talking about extensively. Coming up, we have a further conversation, particularly about where we are with the dollar. Vasily Serebrikov of UBS. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The European Union is set to propose sanctioning 3 Iranian generals and 1 business for providing military support to Russia in its war against Ukraine and their involvement in providing Moscow with drones. The targeted business is responsible for the Iranian drones that have been supplied to Russia, the generals involved in Iran's cooperation with the Kremlin. Shanghai will build an isolation facility that can house thousands of people near the city. Now, it's another sign that China is unlikely to shift away from its COVID-0 policy anytime soon. The facility will be constructed east of Shanghai's business district in an area covering about 35 acres and will have more than 3,200 beds when completed. Nestle CEO Mark Schneider says inflationary pressures will continue into 2023. In an exclusive interview with Bloomberg, Schneider spoke about the company's effort to protect margins with price increases and the impact of energy costs in Europe.
What we're clearly seeing is some of the inflationary pressures continuing. So this is not over yet, and some of this will kind of go into 23. When exactly it's going to peak, I think a lot of that has to do, especially in Western Europe, with the energy situation, because that's a big driver of inflation.
Schneider remains bullish about the brand as demand is strong and sales are surging. And it's a coffee crossover. Starbucks has entered into an agreement to sell the Seattle's best coffee brand to Nestle. Starbucks says the move will allow the company to focus on elevating the coffee experience through its own brand and help strengthen the Global Coffee Alliance, which it established with Nestle in 2018. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
price of anything goes up, the consequences reach far beyond what you'd expect. But perhaps most of all, when it comes to food. In 2010, surging food prices helped spark the Arab Spring. Lives were lost, regimes fell, and the consequences are still with us. Once again, food prices are rising, and fast. Energy costs, broken supply chains, and surging demand were just some of the factors that have driven food prices to their first record high since the Arab Spring. And that's all before a war between two of the world's biggest food producers. Ukraine is called the breadbasket of Europe, and taken with Russia, the two account for about a quarter of global wheat trade. They produce more than half of the world's sunflower seeds and oil, nearly 20% of the barley. Now throw in rising energy prices, and processing, transporting, even refrigerating food gets more expensive. Plus, fertilizer production is extremely energy intensive. Less fertilizer means lower crop yield, and prices rise even more. The pandemic revealed how complicated and fragile global trade systems are. Global agriculture, perhaps even more so. Unlike metals, for example, food goes bad. And crops take months to grow and are vulnerable to unpredictabilities like the weather. Rising food prices will be felt everywhere, but the poorest countries in the world will be hit the hardest. And as all these factors compound, the real fear is that record high will lead to record high, and ultimately to a global food crisis with vast consequence.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg. I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Strong enough to stay, we will never.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
I think we still have a small chance of a soft landing. I don't think we get it, but that's what the market's going to start pricing in first, is a soft or softish landing, and that's going to drive this rally.
Pete Shear, head of macro strategy at Academy Securities, and this is really the soft landing debate. A lot of people saying softish, maybe not a super hard landing.
Very ishy
and
this morning.
It is ishy, and we're seeing that in terms of what we're pricing in. And we heard overnight Citigroup coming out and saying that stocks have priced in a recession, possibly more than other assets, but it isn't overdone yet. Right now, we are seeing a bit of softening. And Tom, you were talking about this sort of whippiness. We started with some gains. Now we're a little bit lower, although we've retraced some of the more extreme losses down about 0.4% yields. I just keep going back to 10-year yields. To me, this may be one of the key stories. Breaking out, hit 4.1%, going back to 2008, some of the highs, and really fed by some of the discussions about where we end up with inflation once we're done with this post-pandemic surge.
So good to our FX guests. Let's do some hands for radio. It's real nice to see on radio, folks. The fact is the 10-year yield is coming up, but inflation dynamic, which means a larger real yield, and we see that with 1.66% on the real yield. That is a change as we go into this Wednesday. One of the great points today was away from FX, but not, and that was Procter & Gamble of Cincinnati, with a set of headlines that are perhaps a new reality for multinationals in America. From UBS, their foreign exchange and macro strategist, Vasily Serebryakov, joins us right now. Vasily, I don't want to do like euro, what's a euro going to do, or sterling. I want to know, when you advise Procter & Gamble in Cincinnati, what the dollar strength means for their operation. They made clear there are FX headwinds.
Absolutely. I think you're starting to see it more and more in U.S. corporate earnings. And in fact, the earnings season that we're entering is or have entered is probably going to show more of that. You know, I think that corporates and investors in general should be prepared for the strong dollar environment to persisting for a bit longer. The dollar is certainly expensive, but it doesn't mean it's necessarily overvalued. And to your previous point, if you kind of account for real rates and if you also account for the global growth downturn, you know, the dollar strength is quite easy to justify.
Vasily, I was talking with a guy named Axel Weber, a not an acquaintance with your UBS, and of course, a former head of the German Bundesbank, and he made very clear to me it's not so much the rates have changed now, but the level. If the dollar just sustains at this level, what is the ramification for other nations?
Well, the ramifications is that, you know, it's once again our currency, but your problem, right? Because in a sense, a lot of policymakers around the world would probably prefer a stronger domestic currency at the moment in order to fight inflation, but they're not getting it. They're getting a weaker currency, and only the U.S. is getting some perhaps benefit from a stronger dollar in terms of fighting inflation. The issue is that we're not detecting a lot of you know, serious concern about dollar valuations. This is not like the pre-Plaza years when there was a strong sense that the dollar was divorced from fundamentals, that we needed to do something about it. Generally, U.S. policymakers have said, you know, markets are functioning well. If you look at rate differentials, if you look at terms of trade, if you look at growth, all of these things combined can justify the current levels of the dollar. So really, I don't think that anything is going to change that sort of from the policymaking front or sort of the G20 coming together and changing the dollar policy. I think what could change it, and will change it ultimately, is the peak in U.S. inflation and the global growth rebound, but that's, of course, remains some way away.
Where is Europe in terms of strength or weakness? And we see ongoing euro weakness today, and how much of this stems from the Italian yield, I'm not sure, but you are seeing ongoing weakening in some of the peripheral rates, given the inflation, given the economic outlook. How do you view the necessity for Europe to have some sort of recovery before dollar strength gets diminished?
It's a very essential part of it. I will offer a little bit of a glimmer of hope for the euro, at least. If you look at European gas prices, for example, they're multi-month lows. So at least some of the energy sector pressures appear to be abating. That's why I think that you're seeing the euro kind of trading around this 97, 98 level, not going to 95 or below, as I think many market participants were perhaps anticipating. So there, we have a little bit of a sense of, you know, hope and stability, but it's really hard to see the euro doing anything significant or rebounding significantly until you get through the winter, until you get a sense that we can pull through this without energy rationing. And then, of course, the things that you mentioned, such as Italian spreads and so on, I think it's just the side effects of a weaker economy, where those kind of market metrics tend to play more into the psyche whenever the overall growth backdrop is weak. So I think there's some hope for the euro in terms of stabilization at the lows, just from the gas prices, but we're still not at the rebound stage for sure.
Well, you talk about the prospects of weaker growth, and that's something facing China as well. Perhaps not an outright recession, but certainly not the kind of growth China has become used to. And as we've been talking, Vasily, the offshore yuan now at another record low against the U.S. dollar. 7.27 is roughly where we trade at the moment. Can China do anything to stem that weakness?
Change zero COVID policy, and as you just said on the show, it doesn't look to be likely very soon. I mean, to be fair, China has been in a very weak economic phase since the second quarter of this year, so this is not necessarily new. I think it's sort of more of the same. Obviously, we're seeing you know, sort of weakening attractiveness of yuan from the interest rate perspective, from the capital flows perspective. From the growth perspective, so in terms of recommendations, we've been solidly bullish U.S. dollars against, against the renminbi, or against the Taiwan dollar. That hasn't changed. We think there's more upside. And to some extent also, if you look at kind of this dollar rally from a maybe 1 to 2 year perspective, the Chinese currency has lagged a little bit in terms of weakness versus, say, the euro and the yen. So there's still a little bit of a catch-up going on as far as the Chinese currency. Yeah, but I think, you know, unless we're seeing a change in the zero COVID policy, it's really hard to change the view on the yuan at the moment.
Vasily Serebrikov of UBS, thank you so much for being with us. And Tom, I keep going back and thinking about your conversations with the IMF, the back office conversations, not necessarily those that are on screen. People talking about where inflation could end up and how it could be sustained, in part because there isn't anything that really breaks the mode that we're really in right now.
Well, yeah, and again, I go back to the media loves y-axis analysis, change, surge, plunge, cratered, whatever. The adults are on the x-axis, worried about time, and what we've learned this year is transitory. Remember transitory? We were younger. Yeah. Okay, we're not transitory anymore. We're out somewhere with a complete unknown into next year. There's guesses, but that's just what they are.
Well, and this goes to the Mohamed El-Erian point. At what point do some of these Fed officials have to give mea culpa or say we got it wrong or say something isn't working and we understand that we made a mistake in the parameters that we've been looking at? Right now, futures are lower. You can see the S&P down at 19, 37.13. You can see the 10-year yield heading toward 4.1%. The real yield, as Tom keeps mentioning, surging. Just did that for you, Tom. 1.66%. Surging.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leni Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Just moments away from the Housing Starts Wednesday, which I assume is what we're going to be calling it. We are seeing the S&P lower now by nearly 0.6%. Michael McKee, Bloomberg economics and policy correspondent, with us here to break down the numbers as we get them. Mike?
Well, we're getting them right now, Lisa, and it looks like a beat on expectation. No, a little bit less on expectations, put it that way, but down from last month. An 8.1% decline on a month-over-month basis in housing starts, 1,439,000. The expectation was for 1,461,000. Now, that's the annual rate at which they're built out. Building permits, we're looking for here. Building permits come in at 1,564,000, and that is lower than that's better than expectations. That's because they revised it here. 1,542,000 was last month, so it's still better than last month. So it does show that builders have some, shall we say, business left to do. I was going to say some confidence these days, but we saw the home builders index yesterday fall to the lowest basically since the 2008 financial crisis brought on by housing. And so it doesn't look like they have a lot of confidence, but they do have a lot of backlogs, and they are putting housing starts, they're pulling permits, and I guess they will probably put some of those houses into the ground.
So just want to give you a sense, I don't know if you can attribute it to this data, but you're seeing the two-year yield breakout now at the newest highs since going back to 2007, 4.52%. You could see the dollar gaining. You could see the opposite effect, and this is basically what's good for stocks is good for bonds. What's bad for stocks is bad for bonds. You're seeing losses deepen in the S&P lower. And Tom, this really speaks to what you've been talking about, which is basically how much are people looking at housing, the resilience there, not necessarily giving pause. 0.7% decline right now on the S&P.
It's there, and you see it in north of the border in Canada. With once again a more persistent inflation as well. Michael McKee, on a global basis, 10.1%, United Kingdom, 6.x%, Canada. This is a theme, this new persistency of inflation. Is it a theme that drifts away according to the guesstimates, or do we go into the end of the year and into next year further distant, I should say, from transitory?
Well, that's a big debate right now.
Yes.
A lot of people suggesting that there are forces out there that will bring inflation down, that we can only see them on the horizon, but they are going to start affecting the overall level of inflation. Others are saying, well, the problem here is no longer the transitory stuff, which may go down. It's the cyclical aspect to it. Chris Lowe of FHN Financial this morning saying cyclical inflation is the hardest thing to get rid of because the only way to get rid of it is to end the cycle. So the only way to get rid of it would be to have a recession. And that is concerning to him. The one thing we can say about housing, other than the construction part, which may be due to backlogs, and there is a very large backlog supply out there, is that housing is the one area that has responded to the Fed. Mortgage applications down 4.5%. They're down 58% since the Fed started raising rates, and by some measures, we've got 7% 30-year mortgages now.
Well, we talk about kind of the need to get inflation down. Obviously, that's what the Federal Reserve would like to see. They probably aren't seeing it to the degree that they want to yet. And we keep seeing these continued upside surprises. And we've had conversations over the last several hours that inflation isn't realistically going to get back down to 2%. We could just be looking at something structurally higher. When does the Fed decide to make that call that either they have to go way farther to get down to 2%, or they're just not going to try anymore to get to 2%, that they're going to target something else?
Well, the idea of changing the target is something that people are beginning to talk about, but that's months and months, if not years away. That would be a major decision and probably would wait until their 5-year review comes up in about 2.5 years or so. But the idea that they don't get down to 2%, they accept that that's a possibility. The idea that they have to make a decision of whether to keep going and raising rates, that's going to be a meeting by meeting decision, because we're going to have to see what the data show each time, and they'll have to figure it out. There's no more forward guidance here.
Good to have Michael McKee with us today. Always a Fed speaker. Michael McKee running all of our economic coverage as well. He is director of White House National Economic Council, which means he is mum during the political season, and we are knee-deep in the political season now to the midterms. Brian Deese joins us from the White House this morning. Brian, to me, the singular note which does wrap around your remit is the gentle lady from Hawaii has exited the Democratic Party. And Ms. Gabbard was really something about the cowardly wokeness of the elitist Democratic Party. Your boss is the most middle-class representative boss of his generation. Joe Biden breathes Scranton. What's going to be the reset on Democratic Party economic policy for the middle class coming out of this election?
Well, look, I think you're seeing it in real time. As you said, Joe Biden ran for president based on an economic theory that we needed to build this economy and this economic recovery, as he says, in very practical terms, from the bottom up and the middle out, not from the top down. And you're seeing that in practice. If you look just, for example, at what's happening in American manufacturing across this country, nearly 700,000 manufacturing jobs created, and you're seeing company after company make investments that they're making a bet, a long-term bet to make capital investments in America. Just today, we're going to announce almost $3 billion in grants to battery manufacturers. I was in Cleveland last week. You're seeing this explosion of interest in making the United States the place where we build and innovate, and that's going to pay benefits for the long term.
You were just in Cleveland to see Cleveland Yankees, admit it. Brian, I want to go to the topic of the moment, which is the strategic political reserve. We all get the politics of it and that. You took Hydrocarbon 101 at Middlebury years ago. Can you explain to me what the Democratic politics is of refilling the strategic petroleum reserve down the road?
Yeah, you got it. I do have to clarify that I'm a Red Sox fan. It's important to me to get that.
Very important.
So look, the president's going to announce two things today. The first is additional 15 million barrels for December out of the SPR. That makes good on the commitment that he made several months ago to release 180 million barrels and provide that stability to the market. He's making good on that commitment with a 15 million barrel release today. But second, he's announcing a plan and a policy to refill the Strategic Petroleum Reserve when the price of oil falls to about $70 a barrel. That makes sense for two reasons. One, protecting taxpayers. We sold oil out of the SPRO at a higher price, at around $90 to $100 a barrel. Repurchasing at $70 a barrel means we can actually strengthen the asset. We can get more oil back into that national reserve. And second, it provides some certainty to the industry, because we will have the authority to both purchase when the price comes down to 70 and also enter into contracts to purchase at around $70 in the future.
But one thing that's very difficult is that we're not talking about the present and what releasing more from the Strategic Petroleum Reserve will actually do to bring down prices not only of gasoline but diesel, of the refined goods that we need. How much are you thinking about additional measures to try to shore up both the stores of diesel as well as lower prices? Are you talking about banning exports, for example, to Europe?
Well, first, let's look at where we are. We have, since the beginning of the summer, seen gas prices come down about 30%. They're down about $1.15 a gallon at the pump. We've seen natural gas prices come off from a high of almost $9 to under $6 in trading today. So we've seen a real reduction in energy prices, and that's consistent with and driven by the policies that this administration and that the president have directed. At the same time, we continue to be very focused on making more progress, seeing that price come down further, and the announcements today, I think, are going to help on that front.
But
also addressing places where we have...
But okay, but that has come down. It hasn't come back that much. But diesel has not come down, and that affects the price of everything. And perhaps people don't see it and breathe it the way they view gasoline prices. But this is affecting very much the heating costs as well as the shipping costs, and has raised questions about banning exports at a time when Europe is flat on its back as well. What's your view?
Absolutely. We're very concerned about inventory levels for refined product, diesel in particular, particularly across the East Coast of the United States. And we are operating right now at unacceptably low inventory levels for diesel that, for example, are 50, 60% lower than their 5-year historical average. So this is a conversation that we have had with the industry consistently, and we've been very clear. We need to see more progress in building those inventories. The federal government has some tools in that respect. We have a Northeast Home Heating Oil Reserve, which is diesel, and we have looked very carefully at being prepared to deploy as and when necessary in that context. But ultimately, what we need to see is the industry build those inventory levels so that we don't put ourselves in a situation. To your question about exports, the president has been very clear and will continue to be clear. At this moment, when we have uncertainty for American consumers, we have to keep all options on the table. That's what we're doing.
Real quickly, what's going to be the trigger point to understand whether it is time to look at exports?
Well, look, I'm not going to explicitly make a decision before the president or articulate a decision before the president has made it, but the president's going to continue to do what he has done over the course of the last several months, which is assess the market, understand where we are, and understand the tools that we have and the impact that they'll have. Today, he's announcing a release from the SPRO, but also importantly, this repurchase plan, which is something that industry analysts and others have been calling for some time. We think that this will make some difference. We're going to keep at it, keep a close eye on these things with an understanding that we have these tools on the table and we'll deploy them when it's in America's interest.
Brian Deese, Director of the White House National Economic Council, thank you. Tom, all options on the table, potentially even including banning exports as we head into a winter with very low stores of diesel.
I was with Spencer Abraham, this is a long time ago, on one of the energy battles. I can't even remember the details, but it was where we were attempting energy independence, and this is before fracking and all that. And I can't emphasize enough, a la our feed, thank you for watching and listening worldwide, is this White House in the commodity trading business of gaming prices?
Basically
I've never heard what I just heard.
Saying, here's the floor, here's the ceiling, and we're going to work with it with the battle that we've got, although it's really a refining story as much as it is a strategic petroleum reserve story. Right now, we're seeing crude very far away from the price that they're talking about, still seeing about $89 a barrel. If you look at WTI, $84 a barrel, excuse me. Coming up, Tony DeSpirito of BlackRock and Lisa Shallett of Morgan Stanley Wealth Management.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russian President Vladimir Putin has ordered the extension of martial law in 4 occupied zones of Ukraine and stepped up security in nearby regions. The actions come as Ukrainian forces continue to press their advance against his troops. Putin told Russia's Security Council today that existing military law regimes in those 4 regions that he annexed last month should be extended. Hong Kong Chief Executive John Lee has unveiled a plan to woo back foreign talent and ease housing woes. It's an attempt to revive the city's status as an international finance hub. Lee announced he would cut property duties for non-permanent residents and relax visa rules. Years of tough COVID-19 policies and political turmoil triggered a brain drain in the city. Ukraine's military claims 13 drones made in Iran were shot down in the southern Mykolaiv region overnight. Now, it happened as officials have reported more attacks against the country's infrastructure. President Biden's administration is pressing Congress for new authorities to speed up production and transfer of weapons for Ukraine. Rolls-Royce has completed the first step toward fulfilling its promise to sell only electric vehicles by 2030. On Tuesday, it unveiled the all-electric Spectre. Rolls-Royce Motor CEO Torsten Müller-Otzfos tells Bloomberg that contribution margins per car are untouched and says Rolls-Royce will be very profitable. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
What are the moonshots at Amazon that are capturing most of your time and attention?
Well, we have a unique way that we look at big new investments. And I'm not sure it's right or wrong. It just happens to be our way. And we ask ourselves when we're considering something 4 questions. We ask, if it's successful, can it be big and move the needle at Amazon? Is it being well served today? Do we have a differentiated approach? And do we have competence there? And if not, can we acquire quickly? If we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business.
When it comes to the stock, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued?
I have never tried to predict what the stock's going to do. And any time I've tried to a little bit, I've been wrong. I do really believe that in the short term, the stock market tends to be a voting machine. In the long term, it tends to be a weighing machine. We have a concept we talk about a lot at Amazon, inputs and outputs, and the ultimate output for a company is share price, and then other big outputs are free cash flow or profit or revenue. You can't really manage the outputs. You have to manage at the input level, and that's where we spend all our time. And so if you do the right things for the business long term, things tend to work out. I think we've had very good returns for investors, and I expect that to be true again.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
Shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
We believe that these markets require patience, diversification, and discipline. We do think that we are going to see peak rates. We do think that we are going to see peak inflation. But what you're going to see dominate over the next couple of months is volatility. And so you will see these type of counter trend rallies.
Kristen Bitterly, Citigroup, there with some of the thoughts in the market, and just since that conversation, it got a yield structure higher, the 2-year yield out to 4.52%. You're greeted on a Wednesday morning by a higher yield environment off inflation that won't give up. Kaylee Lyons in for John Farrow. Again, Farrow giving a paper, playing footsie with the Dow. Really looking forward to that. This is at a symposium in Scotland on the history of the Dow Jones Industrial Average. Thrilled that John's doing that this morning. This is a joy. Because when you go to Boulder, Colorado, you know that the Zoomies are down to Colorado Springs, and they're the real deal. Out of the United States Air Force Academy, an actual pilot running an airline, the chief executive officer with United, the pilot, Scott Kirby, joins us this morning. Scott, I got 18 questions from viewers that have everything to do with the United Lounge, this, that, and the other thing. I want to talk about the ratio of business class to economy fares. I follow one United fare, and it's $6 for every dollar of economy. I've never seen it. Where is business class in 3 years?
So thanks for the intro, by the way. That's a unique one, and I like it. But business travel, business class demand is really, really strong. It's really, really strong in economy, but it's even stronger in the premium cabin. United has more premium seats than any other airline in the country. One, long-haul business demand has mostly come all the way back to Europe, at least. It's even stronger than it is domestically. It's harder to do calls with someone in Europe. But the other trend I think that's huge is there's more premium leisure demand, and really that is enabled by hybrid work. Hybrid work makes every weekend a potential holiday weekend, and there are people that will go to Europe and they'll work for 1 or 2 weeks in Europe, and they work during the day. They go out late at night with the French or the Spaniards. By the way, that's the only way I could possibly go hang out with the French and Spaniards if I stayed on East Coast time. And we see like this. I think it's a permanent step level increase in demand, both for weekend travel, but also for premium demand.
To the volatility, the cyclical nature of your total return of stock, is the new persistency of cash flow from business class enough to give you a more persistent cash flow on your financial statement?
Well, look, I think we'll still have volatility. We'll still be affected by the economy or short term in the fuel prices. So it won't eliminate cyclicality. But what it does is more important, which I think it raises the level. So the lowest period of revenue will be higher than it was before, and the highest period will be even higher. It doesn't take out the cyclicality, but it does raise the bar across the board. It's just a new permanently higher level of demand.
But to that point, Scott, we've spent the better part of the last 3 hours talking about whether or not we're seeing a softening in demand, which is what policymakers are trying to engineer to bring inflation down. Inflation, which in some sectors of the economy means people are just spending less in certain areas. It does not seem that it has hit air travel yet. Do you expect that the demand deterioration is going to come? And will that ultimately mean you don't have the pricing power to keep fares high?
Well, I think the slowing economy and or a recession are going to be a headwind to demand, already are a headwind to demand. But there's 3 trends in aviation that I think they're currently more than fully offsetting. I think we'll continue to. One, we're still in the COVID recovery phase. Japan just opened last week. No matter what you think business travel is going to ultimately get to, it is going to go almost certainly going higher from here. So we're still in COVID recovery, unlike most industries. The second one is this hybrid work, making every weekend a holiday trend. Like September was the 3rd highest RASM month in the history of United Airlines. That is an off-peak month. What happened during September, and we saw it even earlier, we're seeing it in October, by the way, is going to be better than September, so it's going to move to 4th place, is people are now able to work remotely for 1 or 2 days. So they can, instead of being tethered to their desk at the office, they can leave Wednesday or Thursday, go somewhere, work remotely for 1 or 2 days. They're taking extra trips. That's a trend that's not appreciated by the market yet. It's unique to aviation. But it's offsetting those economic headwinds. It's a tailwind that's offsetting it.
Yeah, and Scott, we call that doing a John Farrow at Bloomberg Surveillance. Why don't you continue, Kaylee, with Mr. Kirby?
Well, that's on the demand side, Scott, but there also is the fact that you are still constrained on the supply side. Capacity is still more limited, and part of that has to do with the labor equation. Can you just give us your best estimate as to whether or not you're ultimately going to be able to expand capacity again, or is this a structural labor issue in the air economy, which is going to stick around?
So first, if you're an airline investor, it would have been the 3rd and maybe perhaps most important trend that while there's a really strong demand environment, supply is going to be constrained for years to come by artificial factors. Now, it's less of a constraint for United because we're at the high end. We're the top of the funnel, top of the pyramid for people wanting to be pilot. But there's not enough pilots in the industry. That's not the only constraint. Boeing and Airbus are way behind, and the supply chains are way behind on their ability to produce new airplanes. Air traffic control saturation. There's airports in Europe and other places that are full. These are like 4 or 5 year problems. Even if you start fixing today, multi-year problems to fix.
Scott, when you're in New York next time, landing at Newark and hopefully landing at JFK with that battle, I want to talk about the landing gates and all that. But Mary Schlangenstein, who's our ace airport reporter, says if you don't ask Scott about Boeing 737-8 over to a 7, and they're going to add 12 more seats, and they're going to take this wing and add it on. Scott, this is not confidence building with the redo of the Boeing MAX. I mean, it's not confident building. Do you have confidence that you guys in the FAA can get together to get that plane up in the air?
Yeah, well, I think you're talking about the MAX 10, and hi, Mary. Good to hear from you virtually. But here's what I think about the MAX 10. First, for United, if somehow the MAX 10 and 7 don't get certified under the current standards, our plan is we're going to convert some of those MAX 10s into MAX 8s and 9s, and our large airplane, we're going to order more Airbus A321s, and that's going to be our large airplane. And Boeing will compensate us for that. So for United, it's not really a big deal financially, but it's the right safety outcome. This is the most important point. It's just a different length of airplane. It's the same airplane at a different length. And you'd never want to make two different cockpits or procedures for the exact same airplane. That detracts from safety. So I think because it's the right safety outcome, we will get to the right answer where the MAX 7 and 10 will get certified like the MAX 8 and the MAX 9. I think the more important point is a bigger one for the country, for the United States of America. Boeing is our largest exporter, high-tech exports, manufacturing jobs, high-paying jobs. And the question is about, are airlines around the world going to buy MAX 10s or are they going to buy Airbus A321s? And the real question is, it's the right safety answer. Are these planes going to get produced in Seattle or are they going to get built in Europe and Asia and China? Look, I want both Boeing and Airbus to do well for healthy competition. But the right answer is the MAX 10.
Scott, we're out of time. We need to see you when you're in New York next time. Scott Kirby with United Airlines after a very strong earnings report, to say the least. Kaylee, this Boeing MAX thing won't go away. It's just been there forever, hasn't it?
Yeah, it's something we'll continue to follow, as with the earnings story more broadly, especially the impact of the stronger dollar that we're hearing company after company warning about. There's more on deck.
Futures at -22, Dow futures at -139. The VIX elevated. We're looking at yields. You need to watch for higher yields. This is Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close, weekdays on Bloomberg. Politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg. No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
York City for our viewers worldwide. I'm Lisa Abramowitz in for Jonathan Ferro. Once again, yields taking center stage. Yields up, stocks down. S&P futures lower by about 0.6% as you see yields climb to the highest levels going back to 2007. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open with Jonathan Ferro.
We begin with the big issue, torn between earnings resilience and inflation concerns.
Resilience has been the key word. There is some positive news on earnings.
They're actually pretty resilient.
Earnings so far have proven indeed to underscore that story of resilience.
The bar is low.
Companies have a lot of levers to pull and use in order to engineer better earnings.
Company earnings do not yet reflect the wider macroeconomic expectations.
You can have a weaker economic environment and actually a solid earnings environment.
But I do think downgrades are still coming to 2023 earnings.
Inflation was supposed to be moderating.
Now it looks like we're going into extra innings. Wage pressures are pushing into prices now.
This is presenting a real challenge for not only the Fed, but the broader economy.
There's a game of chicken going on right now.
The Fed on one side versus earnings on the other.
Joining us now, I'm so pleased to say, Morgan Stanley's Lisa Shallett and BlackRock's Tony DeSpirito. Lisa, starting with you. Yes, earnings have come in better than expected, but is it good enough?
The question is good enough for what? I think the fundamental issue is that this is a market that has extraordinary impatience, and just wants to quote unquote, be done with it already. And I think that the frustrating piece of this is that Q3 earnings are not allowing us to see that capitulation, that rebasing and resetting of 2023 earnings expectations yet. There's still a huge tailwind of the power of nominals or pricing power and inflation in the results we're getting. And so, the commentary about resilience, I think, is going to ultimately prove to be a head fake, but it's not yet a clearing event that sets up for a durable, viable bottom in this market.
Which really raises an issue, Tony, of whether these earnings are really relevant given the lack of visibility and given that we might not have seen the weakness yet, but it will still come.
So I do think third quarter earnings, unfortunately, are a lagging indicator, not a leading indicator. The Fed just started raising rates this March, and that first increase was 25 basis points. That was 7 months ago. And we all know it takes time for Fed rate increases to impact the real economy and earnings. It doesn't even start for 6 months, and then the peak impact is really 18 months down the road. And of course, the Fed has done a lot in a short period of time, right? 300 basis points since the beginning here. So I don't think we've felt the full impact yet. And so I do think in the near term, that means bumpiness in the market. And there's still some good news there. I think the good news is there are things that, as asset allocators and portfolio managers, we can be doing to build more resiliency in our portfolios. And then as I look longer term, I do think valuations are certainly much more attractive today than they were at the beginning of the year. And that does spell better things for long-term returns. So I do think it's important to stay invested, but to prepare for more volatility in the near term.
And Lisa, do you agree? I mean, B. Riley's Art Hogan sees Q3 results as a potential catalyst for equity, saying, quote, what is important to remember is that second quarter earnings came in much better than feared, sparking a solid July rally. There is a credible possibility that history may repeat itself this go around. Perhaps, and even your colleague Mike Wilson may agree with that, but do you agree with Tony that this actually could be part of a longer term gaining cycle? So it's okay if there's some volatility on the downside after that.
Absolutely. I mean, I think we're going to be on this roller coaster to nowhere, where periodically we're going to get these bear market rallies where as I said, that this is a very impatient market. Investors seemingly have no tolerance for pain. And so any sign, that the wind may begin to blow their way, gets a 2 or 3 day rally going. But I completely agree with Tony that we have not seen the real impact of tighter financial conditions and tighter monetary policy on either the slowing in the economy and or corporate earnings. So that is still in front of us. We still need to rebase numbers. And unfortunately, it doesn't look like Q3 is going to be that, capitulative, event that pushes those 2023 and 2024 numbers down to where they probably ultimately will go.
So what do you do with this, Lisa? I mean, do you basically sell the rally now and prepare for whatever downturn comes after we start to get more of a sense of that bleed through of higher rates?
No, not at all. So we also agree with Tony that this is a time to be fully invested, but it's a time to be fully invested in an asset allocation that acknowledges the environment that we're in. And that environment is this very sideways change of leadership, end of a cycle, beginning of a new cycle, type positioning, which means you've got to be ultra diversified. You've got to, really take advantage of where the bond market is right now. We believe that the bond market is much further along in discounting this Fed cycle than the stock market. We like investment grade, particularly, in the shorter to intermediate duration. And within stocks, we are looking for value. We are getting opportunities to be active stock pickers, and we're seeing it, in various sectors, in various geographies, especially with the dollar, and in multinationals are very interesting to us right now. We're seeing it by factors. Exposure, so we're not growth or value. So we're to pick our spots, but there are opportunities in this market. We're just going to have to be patient.
Talking about some of the consumer-facing internationals, multinationals, there have been a string of beats headlining third quarter results in the past 24 hours, including some of those multinationals like Procter & Gamble. We also have got Netflix and Nestle. For more, let's bring in Bloomberg's Taylor Briggs. Taylor.
Yeah, Lisa, I mean, for the most part, it has been a little bit better than expected. Some of this could just be the lowered, again, expectations coming into this. But when you think about the numbers, we're still looking at about 2% growth on earnings on a year-over-year basis. And of course, relative to expectations for both the sales and the earnings, it is coming a little bit ahead. And you also highlight 9% sales growth on a year-over-year basis, highlighting some of that price pressure, of course, that some of these companies are able to pass on through to the consumer. I want to caution, it is very early days. There's still a long ways to go in this season, but so far, here's how we're thinking about things by sector. You mentioned Netflix, a huge blowout yesterday. Communications has actually been a little bit of a laggard in terms of where we are versus estimates, expectations. But down at the bottom, you can see some of the big sort of outperformers have been discretionary. It's been industrials. And then, of course, there's been some of the utilities as well that are doing okay as long as bond yields stable out here. I think at the beginning, Lisa, I mentioned where we are relative to expectations, because all of this is sort of the positioning coming into the earnings season. We are now looking at 19 straight weeks of earnings revisions lower. So if you set a bar low enough, you're bound to beat it, I suppose.
Taylor Riggs, thank you so much. Lisa Shallot and Tony DeSpirito still with us. Tony, what's your take in terms of what the signal is to get from earnings, especially given the fact that you've got the likes of Goldman Sachs saying we haven't priced in recession, there's further downside to go. A lot of people seem to agree, and yet we're not seeing it now. We're going to possibly see it at another time.
Yeah, so I think the thing to do as investors is to both be positioned for resiliency as well as try to be offensive in unique ways. So, for example, I think of a barbell strategy between cyclicality and stability, and I think you can add value there on both sides. For instance, on the stability side, you talked about utilities earlier. I think healthcare is a way better way of getting stability than utilities. Utilities and staples are very expensive for what they are. They have premiums of roughly 20% versus the market. Historically, that's not been a good time to invest in those sectors. On the flip side, healthcare is trading at a discount to the S&P 500, despite the fact that earnings resiliency for healthcare has shown to be extremely good in periods of recession. So you got earning resiliency and valuation That's in the fund I run, the equity dividend fund, that is the single largest overweight, for example. And so I think that's a way that you can be aggressive in your portfolio, for example.
Tony, I'd love to go a little existential. We were talking about this, Lisa talking about how some of the rate structure hasn't been fully realized in equities just yet. And we've been talking with people about how we have not seen the highs yet, and we have not seen where we end up. We are not going back to 0% rates. Where do you think that we're going to see the biggest pain in the equity structure, and can equities still be as value driven as they have been in the past with that kind of rate structure?
Yeah, so we run a model, an equity risk premium model, which is basically a stocks versus bonds model. And if you look at it, actually, so this is where I would disagree with Lisa. I do think the equity markets have priced in current rates. Based on our model, the equity risk premium is smaller than it was at the beginning of the year, but it's still larger than historical averages. The margin of safety there is rates could increase another 70 basis points on the 10-year before that would flip to, say, buy bonds over stocks. And so that's what we're seeing. The other thing that we're seeing that's kind of interesting is growth versus value. You know, growth valuations have come down pretty dramatically this year. They're now at a normal level, so they've corrected. Yet the valuations of value stocks are still really low PE multiples. And one of the insights I think there is for asset allocators that we wrote about in our latest quarterly is barbelling growth and value is better than buying the stocks in the middle. The stocks in the middle actually look pretty overvalued, whereas growth and value both look attractive.
Well, and Lisa, weigh in on this. Do you think that stocks have fully appreciated, as Tony was saying, perhaps rates right now, perhaps not where rates will go by the end of the year, but where they'll end up once we get post this pandemic-driven inflationary surge?
No, I mean, we look at the equity risk premium a little bit differently, and we think that, this has been a market where equity risk premiums have actually been below average given the amount of risk that's out there. That having been said, I do think that we agree on this barbell strategy. We do like more stable or growth or even defensive names in healthcare. But for us, we're barbelling against that stability with things like industrials, things like energy, things like the defense industry as a way of kind of, stock picking, quite frankly, in this environment. Because again, at the index and beta level, at that S&P 500 index level, that we're just not convinced that mega cap tech, which dominates those indices, have really priced the reality of higher for longer, maybe forever.
Lisa Shallett, Tony DeSpirito, both of you sticking with us. Some breaking news crossing right now. Abigail Doolittle has more. Abby.
Hi there, Lisa. Well, we do have breaking news headlines crossing the Bloomberg terminal regarding former President Donald Trump and the classified records probe. Prosecutors see evidence for bringing obstruction of justice charges against the former president. No decision has been made, but Justice Department prosecutors believe there is sufficient evidence to charge Trump. The path to an actual indictment is a little bit less clear. Timing, politics. And Lisa, this is not necessarily new, but it seems as though maybe they have a bit more evidence in this direction around the mishandling of those classified records. Again, there's a possible charge of obstruction of justice against Donald Trump, and it's not likely anything will happen, I guess, ahead of those November 8th midterm elections, but one former member of the FBI does think that this could happen by the end of the year.
Abby, thank you so much. Coming up, UK inflation hitting double digits yet again.
People are struggling. It is difficult at the moment. That's why we put in place the energy price guarantee. We've delivered the energy price guarantee. We've helped people this winter, and I will continue to do that.
That conversation still ahead. 17 minutes to the opening bell with futures lower. And we do have 0.6% decline, 37.09. This is Bloomberg.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
I've made. But what I don't apologise for is the fact that we have helped households through this winter, through the energy price guarantee, the fact that we've reversed the national insurance rise, and the fact we are taking action to get our railways running.
Brutal PMQs where she was accused, Liz Truss, of not being able to keep her word for more than a week and not really being the true leader of the United Kingdom. UK inflation hitting a 40-year high again, adding yet more pressure on policymakers to act, even as markets remain on edge with all the political back and forth. This coming as investors look for an FX intervention over in Japan as the yen hits a 32-year low against the dollar. Team coverage starting right now. Let's start with Lizzie Burden in Westminster. Can we just get a sense of how controversial those PMQs were and where that leaves Liz Truss's prime ministership?
Well, I was speaking to a Tory MP after this session of Prime Minister's questions, and he said at least she turned up, which shows just how low the bar was for this performance. The big surprise was that she said she's committed to the triple lock on pensions, which guarantees that pensions will rise with the highest of earnings inflation, or 2.5%. It was a big surprise. It surprised the newspaper editors who'd been briefed that they were going to drop this commitment, or at least that it was under threat. It makes a fool of newspaper editors when she needs them on side. It makes a fool of the ministers who were briefing it, and it makes her Chancellor's job even harder because he's going to have to plug that £40 billion hole in the public finances somehow else. It raises the question of whether she'll raise benefits in line with inflation, because Hunt has said that he's going to protect the most vulnerable. And as you say, we've now got back to double-digit inflation, so there is huge pressure on him to help them out. It really smacks of incompetence. Very, very weird decision.
And meanwhile, people are looking for the Bank of England to make a bold move to try to counteract some of the inflation on the other side, possibly creating more disruption. Meanwhile, over in Japan, yet more potential policy turmoil. The speculation of this has been running for a long time. However, we are reaching levels that become unsustainable, certainly for policymakers, certainly the speed at which the yen has been weakening. Damian Sassower here for more. What do you think is the threshold for some sort of intervention as we see the yen bump up, or down, I should say, against 150 with the dollar really strengthening?
Well, Lisa, you just hit the nail on the head. It's all about the speed of the move. That's all that matters, right? I mean, you can continue on with yield curve control in Japan. You can even change from the 10-year to the 5-year as a target, or even move the band a little bit wider. But at the end of the day, it's all about the fact that Japan has plenty of reserves, and they're willing to defend their currency as far as it will go. Well, we'll see about the speed, and we'll see how it goes. What I'm most focused on is the broader Asian region, because what you're seeing is FX reserves globally are down 8% year to date, a lot of it due to the dollar strength relative to the developed market peers. But I mean, my goodness, you're seeing reserves get pummeled, and in places like Indonesia, Malaysia, the Philippines, they're already engaging in all forms of intervention, Operation Twist. You hear people on the tape each and every day. So it's not just relegated to Japan or the UK, it's expanding to the whole of EM as well.
All right, Damian Sassower, Lizzie Burden, to both of you, thank you so much. Still with us, Tony DeSpirito and Lisa Shallett. And Tony, at what point does the rest of the world's problems become the U.S. problems?
Yeah, so I mean, the rest of the world problems have been mostly caused by the strength in the dollar. And so I don't think it works that way. Usually it works the other way. U.S.'s problems become the world problems. And so I'm not super concerned, but I'm watchful. Watchful of market dislocations like what we saw in the UK. And certainly when you think about what could cause a Fed pivot, these are things that are on the list.
Lisa, we were talking about multinationals being a potential opportunity. Where is that versus a potential liability given some of the foreign sales at a time of dollar strength?
Yeah, look, I mean, I think this is one of the conundrums at the minute, which is, for U.S. companies right now, the strength in the dollar has gone from, a non-factor to a negative factor. For the U.S. economy as a whole, however, the very strong dollar has actually, believe it or not, kept a lid on inflation given the percentage of our economy and our consumption that we import. And so one of the interesting dynamics here is whether or not the U.S. dollar at some point in 2023, when that potential Fed pause or pivot comes, does that weakening dollar then actually become a liability for the Fed because it's very destabilizing vis-a-vis declining inflation. So these are really complex cross currents. We're seeing extremes in this cycle in terms of U.S. dollar strength, not versus emerging markets, which we very often see. Emerging markets actually on the whole have been resilient and have held up. But we're seeing these devastating discontinuities, but with our key trading partners like the UK, like Europe, and like Japan.
Lisa,
and destabilizing.
How focused on the U.S. are you in terms of your investment portfolio? I mean, are you basically completely overweight, hiding out in the U.S., or are you starting to dabble in some of those emerging markets or even the United Kingdom?
We absolutely are dabbling. We think that there are some very, very good value opportunities. We're leading with EM right now in terms of our interests, but we're, again, as I noted, we're scrambling through and searching through the wreckage for those multinationals in Japan, in Europe, in the UK who are going to make hay on a global competitive basis with their currencies where they are.
Tony, final word on this point?
Yeah, so I run a large cap U.S. value fund, but as part of that, we look at multinationals in other geographies because they're competitors to the U.S. companies we're looking at. Right now, I've got about 20% of the portfolio in non-U.S. companies. They're all multinationals. A lot of companies in energy or pharmaceuticals, what we're finding is a headquarter discount, so very similar business models. I'll take energy, for example, the U.S. integrateds versus the European integrateds. There's a huge multiple gap there, with the European integrateds being almost half the multiple of the U.S. But you look at the business mix, incredibly similar. So that's a better deal. And so that's when we'll stray outside the U.S. to get that better deal. Energy is an example. Also pharmaceuticals. That's the other place where we're seeing opportunities outside of the U.S.
Lisa Shallett, Tony DeSpirito, thank you so much. Fascinating about international, multinational companies outside of the U.S. Coming up, the morning calls, and later Invesco's Kevin Holt looking for earnings estimates to keep coming down. He and a lot of others, he'll be joining us around the opening bell. Right now, that softness hanging in there around 0.6 of a decline, 0.6%, 37.11. This is Bloomberg.
the satellites have propulsion systems. They can kind of move to get out of the way of each other or change their orbit a little bit. It's a service that you guys offer to help these companies know how to maneuver their machines.
Yeah, we offer a collision avoidance service. It's a subscription service. We'll send you an alert up to 7 days in advance if your satellite's going to come dangerously close to a piece of debris or another satellite.
Companies have been doing that for decades, moving satellites around, but it's sort of like a harder problem now.
The risk of a collision is a lot higher now, just because we've installed so much more hardware into space. You have a big collision, it creates a cloud of debris, and now all the other satellites are flying through this whizzing mess of debris. As we add all of the new satellites into space, the risks of the collision, the likelihood of the collision is going up.
Countdown to the open begins. I'm Lisa Abramowitz in for Jonathan Farrow. You do see yields surging past 4.5% on the 2-year, and you see stocks lower. 0.7% decline on the NASDAQ, 0.6 decline on the S&P. Time now for the morning calls. First up, Baird upgrading Lockheed Martin to outperform. $513 price tag, highlighting the stock's attractive valuation and improving outlook. Next up, Evercore downgrading Best Buy to in line, expecting elevated inventory levels to keep pressuring margins. And finally, JP Morgan upgrading Netflix to overweight, pointing to the company's impressive quarterly results. They didn't at least fail. That was where the bar was at, and they surpassed. Coming up, big tech earnings kicking off. Invesco's Kevin Holt expecting higher inflation to mean lower tech stocks. That conversation coming up next.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
This is Countdown to the Open. I'm Lisa Abramowitz in for Jonathan Farrow. Moments away from the start of trading, we do see losses across the board after trying to get up and a little bit more optimistic following some of these earnings. The NASDAQ leading the charge, down 0.7%. S&P right there with it, down 0.6%, really led by yields. Yields higher, stocks lower. That is what we've seen consistently. And right now, people are starting to get adjusted to inflation that keeps beating to the upside, keeps pressure there. 10-year yields hitting at one point, and currently the highest levels going back to 2008, near 4.1%. The euro weakening, 97.85 versus the dollar. Crude just edging up, but really right now the story is very much in the yield space, with two-year yields hitting the highest going back to 2007. Joining us now with a look at the stocks moving at the opening bell, Abigail Doolittle. Abby.
Well, Lisa, we are looking at our first down day in a few days, and not surprisingly, as you were just talking about, rising yields pressuring stocks overall, but especially big tech. Take a look at Apple, right now down 1.2%. Valuation more of a concern when yields rise, that repricing of risk. JP Morgan Chase, banks also not really getting a bid, even though yields are higher. That's been the story of the year, probably because the yield curves are coming in just a little bit, but JP Morgan Chase well off of its 1% lows. Plus, that stock's been up a lot in recent days off of that good quarter, and maybe it's going to flip right now. Spirit Airlines up 2.2% on the news that the shareholders have backed a $3.8 billion purchase by JetBlue. Of course, there's been this back and forth between JetBlue and Frontier, but right now it does appear that shareholders are approving this deal with JetBlue, and they expect this deal to close no later than the first half of 2024. That's a ways off, so let's see what else happens in this story. And then finally, Netflix heading to its best day since January of this year on a monster quarter. Growth is returning, and they're looking at a forecast of 4.5 million subscribers for the fourth quarter, and that is really helping the stock out in a big way on the day, Lisa.
Actually growth, not shrinking. Abby, thank you so much. Let's stick with Netflix. CEO Reed Hastings applauding his company's return to growth. Take a listen.
Well, thank God we're done with shrinking quarters. So that's the big feeling of we're back to the positivity. We still got FX, so that's a huge hit, as we've explained. So that's not going to go away. But other than that, all the stars are lining up very well for us.
Reed Hastings taking it religious. Bloomberg's Ed Ludlow joining us now for more. Ed.
Yeah, 2.41 million subscribers in the quarter, double what they had forecast. 4.5 million new net subscribers come in the current fourth quarter. The street likes the story. They like the visibility on the growth trajectory. They like the idea that an ad-supported tier comes this November. They like the idea that password sharing will be charged as of next year. There are headwinds still, though. They spoke about the stronger dollar, right? That's going to mean a $1 billion hit to revenue and an $800 million hit to profit. Even so, the street's still bullish because they believe that an ad-supported tier will increase subscribers by a meaningful volume. This is a company that's having strength globally, right? Korea was a strong point in terms of local language content, which helped to drive growth. They're also strong in markets like Latin America and other parts of Asia. Interestingly, despite the guidance for the fourth quarter, they are going to suspend forecasting quarterly subscribers. This is a company where executives have been banging their head on the armchair saying, please stop getting so obsessed about subscriber growth. Look at our traditional financial metrics. In the quarter, a beat on the top and bottom line. But again, take into account that stronger dollar. We knew this earnings season it would have a factor, and it has done so for Netflix.
Ed Ludlow, thank you so much. United Airlines, the latest to clock an earnings beat, joining the ranks of Procter & Gamble and Netflix, as we were just talking about, and Nestle. Bloomberg's Taylor Riggs is back with us for more. We were just speaking with Scott Kirby of United. What's the latest?
Wild, Lisa. 4:30 yesterday after the closing bell, we get comments from United Airlines saying that the COVID recovery trend will really overcome any recessionary fears. And for me, that is the statement. And then, of course, when they come out and they say that the fourth quarter adjusted operating margins will also exceed 2019. So that really shows the pricing power amidst some of the capacity declines and the strength of United Airlines. Let's talk about some of the inflationary pressures with some of the other big earnings, of course, that we're getting also this morning. Procter & Gamble, one of them, like Netflix, highlighting the strength of that dollar. You know that the pressure that puts on overseas revenue in a different currency, and when you translate onto a dollar-based balance sheet, then the pressure that causes. Adobe facing a similar story, a 4% currency headwind there, but otherwise sales looking about $19 billion for the full year. Intuitive Surgical is an interesting one, also raising that full year growth to 17 to 18%. Previous estimates had been around 15%, and a lot of analysts are seeing some strength within hospitals, still spending on some of these. Abbott, of course, is just a decliner as well, looking at some decline in revenue and profit after those baby formula shortages. But overall, Lisa, it has been a relatively good season here so far.
And the bar had been pretty low, and people initially were pretty happy with it, although we'll see whether yields continue to erode that. Taylor Riggs, thank you so much. Dollar gains starting to cut into third quarter results, as we've been talking about. P&G, Netflix, Adobe, all warning of the side effects. Let's bring in more with Kaylee Lyons. Kaylee.
Well, Lisa, Taylor was just talking about P&G, where you're definitely seeing this showing up. They're saying their full year profit is going to be at the lower end of the forecast. They talked about a number of different headwinds, one of them being foreign exchange, that stronger dollar. Ultimately, foreign exchange having a negative 6% impact in sales for the fiscal first quarter. You also have, of course, the pricing issue. They're facing higher input costs, but what that means is they are passing those higher costs on. Pricing up 9% in the quarter. So overall, that led to organic revenue growth of about 7 percentage points. That is, of course, the inflation issue coming through. To get back to the dollar, though, P&G not the only one warning about this, as you said. We heard it from Netflix too. Ed mentioned it. That's part of the reason the sales forecast came up short, but the list is much longer than that. Basically, every multinational company is going to face this in some shape or form, because as Taylor said, all the money you make overseas in weaker currencies is worth a lot less when you have to translate it back into dollars at the other end. And that is likely why we have seen companies with high international sales exposure underperforming those with low international exposure. And as for what those companies are, a lot of them are technology companies. If you look at the international revenue exposure as a percentage of revenue for sectors in the S&P 500, it's 52% for technology. Of course, we're going to get a lot of those big tech names reporting results next week, so watch out for that dollar keyword. And you have materials and communication as well as staples and financial, which of course we've already been hearing from. Lisa.
Kaylee Lyons, thank you so much. Right now, joining us, Invesco's Kevin Holt, who sees further downside in stocks as an opportunity, writing, quote, stocks are likely to see continued valuation compression and earnings estimates will need to come down. We see the S&P 500 becoming more compelling around 3,000 to 3,400, and as cyclical equities further discount economic concerns, we will look to build exposures. Kevin joins us now, and honestly, Kevin, it's amazing to see how people talk about the bearish cases, how far they go down as a sign of optimism. How far away are we from that right now as we get 3,700 on the heels of earnings that have been better than expected?
Yeah, so it's, I would say one thing, earnings have been better than expected so far, but we've had a lot of financial stocks where interest rates have gone up, so they've been the beneficiaries of that. I think as we get further into the earnings reporting season, you're going to see more stress. You can see from P&G results, which you guys just talked about, there's going to be a lot of pressure on the consumer. And as that, consumers 2/3 of the U.S. economy, so as that pressure builds, it's going to become difficult. But I think we're all looking for inflation to peak. And when inflation peaks, even though earnings may continue to go down, I think that's a signal that we can look to and say, okay, now it's time we can really get back involved. And we're not there yet. So probably Q1, Q2 of next year is my estimation of hopefully when things will bottom out on an inflation basis.
Kevin, we were just speaking with Lisa Shallot and Tony DeSpirito, and they were talking about liking multinational companies outside the U.S. who could actually have the reverse kind of effect of some of the multinationals in the U.S. that are seeing the dollar as a headwind and having it actually be a tailwind. Do you have a similar kind of perspective as you try to invest in something, preparing ahead for perhaps a better opportunity to buy?
Yeah, so we don't, having a 5-year time horizon, which is a little bit longer than probably most investors, we look at currency probably as more transient. With a lot of the geopolitical issues we have going on right now, I think the dollar is artificially strong. Could these geopolitical issues continue on indefinitely? Possibly, but I think that's unlikely. So we view the dollar as being, extremely high, being a transient issue, and we're not really letting that affect our investment decisions.
With a 5-year time horizon, Kevin, how do you game out where we're going with the benchmark rate and the valuation prospect longer term for really where these valuations ought to be on the equity side?
Yeah, so we are using history, and it is difficult when we haven't, most of us have not been through an up interest rate cycle. So I think you have to look at the normal multiple historically is 15, 16 times. And that's kind of where my 3,000 to 3,400 come out in terms of earnings are coming down from probably about 250 expectations for 23 to that 210 to probably 220 level for next year. So that makes me think that we'll kind of bottom out around there. With that said, I think a lot of the inflation issues in terms of oil, I don't think oil is going to get better. I don't think it's going to get a lot worse. I think food, as soon as we can rectify some of the situations or hopefully the Ukraine-Russia situation resolves itself, that situation will resolve itself. Wages, probably a little more difficult. That's probably a 1 to 2 year time horizon, and the same with rents. But as we kind of approach, I think we still go back to a positive backdrop. I'd be very constructive on a 3 to 5 year basis right now. It's just the next 6 to 9 months that I think are a little tricky.
We're going to continue the conversation coming up. Invesco's Kevin Holt will be sticking with us. Coming up, we've got the Biden administration planning another SPR release.
The president's going to announce two things today. The first is additional 15 million barrels for December out of the SPR. Second, he's announcing a plan and a policy to refill the Strategic Petroleum Reserve when the price of oil falls to about $70 a barrel.
Conversation still ahead with President Biden's energy advisor, Amos Hochstein. That's coming up. This is Bloomberg.
Politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
What do Formula One cars and your local supermarket have in common? Well, strange as it sounds, they might both be using the same technology. A lot of innovation has trickled down from the world of high-tech engines, and it hasn't just found a new life in road cars. F1 cars have long been thought of as the peak of cool, and technology in them is also helping to cool down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors Championships, working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's KERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at TERS, or a thermal energy recovery system, looking to harness the heat produced from braking and the engine exhaust. That could allow cars to generate the same power using 30% less fuel. So while F1 may have a reputation as a gas guzzler, some of its innovations in the name of speed are helping in the everyday fight against climate change.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Joyce Abram was in for Jonathan Farrow. For our viewers worldwide, we're now joined by Amos Hochstein, Special Presidential Coordinator for Energy Security from Washington, D.C. Amos, thank you so much for being with us. I want to start with what President Biden has talked a lot about, which is the release of the Strategic Petroleum Reserve, an additional one, as prices climb a bit, but are still just $3.85 relative to the $5 a barrel that we saw earlier, $5 a gallon that we saw earlier in the summer. Why do an SPR release now, given the fact that prices have come down as much as they have?
Well, first, good morning, and it's a pleasure to be with you again as well. Look, the president has been committed over the last many months to take every action to keep oil prices down and translate that into keeping gasoline prices down. So we're doing two things today. One is the release of 15 million barrels, which, as you know, when we announce it today, these barrels will come on the market in December. When there may be other events happening in oil markets, and as a result of whatever Vladimir Putin has in mind, once the oil markets are affected by the EU ban. So we're taking steps today to make sure that the U.S. market is supplied. Second is to tell American oil companies and gas companies that they should immediately take their profits and start increasing their investment back in America. And to increase production, increase CapEx, increase production. And to do that, we're giving them the certainty that we are going to be purchasing back the oil into the Strategic Petroleum Reserve once prices, if the prices come down towards $70. So the combination of these two announcements today should allow for prices to come down now, hold them from increasing in case something happens, and incentivize American companies to increase CapEx investment and production.
Well, Amos, this is focusing on the crude product, not the distillate. And I know that you guys don't control distillate, so this isn't going to be something in your remit. But we have heard, and we were just talking to Brian Deese, about the potential to restrict export of certain distillates, in particular diesel, as those prices do not come down to historical lows. How much do you think that that could be a benefit to the U.S. to reduce or even ban some of those exports to some of our allies?
Well, that's not what we're discussing at the moment. That's not what we're announcing today. That's a hypothetical conversation that I never take anything off the table, but it's not what we are announcing today or any time in the very near future. So I would put that aside and focus on where we are, which is trying to bring down the price. There is no doubt we are concerned about, on the diesel side, on inventories. We hope that American companies favor and ship their products to different parts of the United States to make sure that we have what we need. But at the same time, we're looking right now to increase our production and to invest back in the United States, because I think the most urgent thing is to make sure that, as we've already seen gasoline prices coming down in the United States, that we continue to see that happening even faster. And again, we can't just have the SPR. We need American companies to increase production and to invest so that we have, across the value chain, we have enough to ensure the American economy continues to be strong and to fight against the inflation concerns that people have.
That's the long term, Amos. In the short term, we do have the SPR. That has been the tool, and it's been a tool that this administration has used. You talk about buying barrels back at the $67 to $72 range at a time when crude right now is $84. We have a long way to go before we get there, and we have inventories at the lowest levels going back to the early 1980s. How concerned are you about a lack of firepower in the one immediate tool that we have if things do get difficult going into this winter?
So, look, I think that we can do multiple things at the same time. I think the point that you're making, that we're nowhere near $70, is exactly why it's time for American companies to increase production. That's not the long term. That's actually the short term. These are short cycles. Investment is already increasing. We would like it to increase more. But the fact that we're at $84, I'm not saying that we're trying to bring the price to $70. I'm saying that if it goes to $70, they know that we are going to come in, the United States government is going to come into the market as a buyer. And that creates a little bit more of certainty for companies as they weigh the risk of increasing investment. So we are mitigating that risk. When it comes to the distillate and to diesel supply, look, we are very concerned. We would like to see and to ensure, the president has been very clear, we want to make sure that the U.S. is protected. And that means to make sure that we have the ability to use the SPR as a tool, which the president has used with enormous effect. If you look at the banks and everybody else, what they're saying about it has been enormously effective.
Yeah.
We want to continue to use that. As we go into the winter, we want to make sure that there's diesel and heating oil and gasoline that is available in case there are storms. That is something that we're already paying attention to. And I think American companies should be paying attention to that too and doing their share.
20 seconds, Amos. How did you come up with $67 to $72, a very specific amount for the floor?
Well, I think that we've been having conversations with, look, my colleagues and I talked to the CEOs and the leadership of most of the energy companies in the United States to understand what would serve as an incentive, what would make them feel comfortable about increasing production, increasing investments. And I think this price reflects something that's good for the American consumer and incentivizes American companies.
Amos Hochstein, Special Presidential Coordinator for Energy Security, thank you so much for being with us. Let's stick with energy, and still with us, we do have Invesco's Kevin Holt. He has been looking to add back to an energy exposure on any underperformance. Kevin, back with us now. Is this on a structural bet, or is this on a temporary breach that you're expecting to really escalate heading into the winter?
So, I mean, this is completely 100% structural. I mean, we've spent a lot of time, and a lot of investors. The oil industry lost a lot of money for a long time. If you look at Exxon, for example, it's still underperformed the market the last 10 years by 50%. So this is an industry that was very undisciplined. So getting them to earn what we call a cost of capital, to earn cost of capital, to earn the right of investor dollars, you need $75 oil. So that's kind of our mid-cycle pricing, and that's kind of what we look at. It's taken us many years to get the industry to not just be growth-oriented and be focused on returns and cash flow. So I think that's what you have. Could you go to 65 temporarily? Yes, but for investors, oil demand grows 1%. So you don't need companies growing 5%. We're in a very difficult period with Russia, but you can't just turn supply on and off very easily. It's just very expensive and very difficult.
But Kevin, what we just heard there from Amos Hochstein was pretty telling, that basically he's talked with all of these oil executives, or that the administration has, and they've come up with this range of $60, $70, $72 as the floor that would incentivize them to invest. How much does that really contribute to your bullish thesis at a time when we're pretty far away from that still, to the upside?
Yeah, I would say, first of all, our reserves are at 40-year low levels. So the SPR is in very dangerous territory. So I commend the administration for putting together a plan to refill it, because we need to, because if something catastrophic were to happen here, that would be very problematic for us. So I think, first of all, you kind of look to that issue. But on the CapEx front, again, we kind of need that $75 oil. I think one thing that people forget too is OPEC. Generally, Saudi and OPEC countries, they don't have an income tax system like the United States. So, in example, Saudi pays about 85% of their social programs are paid by oil, and they have an $80 break even. So a lot of things acquiesce around that $75 to $80 level, and that's kind of, structurally, I'm a little worried short term with the recession, but longer term, I'm very constructive.
Kevin Holt, thank you so much. Invesco Chief Investment Officer over at the company. Coming up, the market-moving events that you need to be watching. That's next in our trading diary. We can see weakness as the session does grow old, still down, although not down quite as far as before. The S&P lower by 0.5%. The Nasdaq down by 0.6%. Yields higher as people think out about inflation higher for longer. This is Bloomberg.
is about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Breaking a gaining streak with some losses, at least in early trading. Everything can change just in a matter of minutes or hours. S&P lower by about 0.5%, 37.01. NASDAQ down about 0.3%. Yields higher, price on bonds lower. That is the theme. It has been the theme. It has accelerated some today. The two-year yield crossing 4.5%. As we talk about inflation for longer, also how far the Fed could potentially go. The 10-year yield also higher, at one point hitting 4.1%. All of this feeding into dollar strength. We're seeing that across the world, but particularly when it comes to Europe. The euro at 97.77 right now, as we look at some potential weakness in the yields on Italian bonds surging to highs that we haven't seen in a while. The pound also softer, as we did get those PMQs over in London that were pretty brutal. Time now for the trading diary, what you need to be watching this week. President Biden discussing energy at 1 Eastern, followed by infrastructure remarks later in the day. The Fed's Beige Book coming at 2 p.m. Plus, we'll hear from the Fed's Kashkari, Evans, and Bullard. We heard from Kashkari earlier about the potential for north of 4.75% Fed funds rates. Tesla reporting results after the closing bell. Another round of jobless claims on Thursday, and finally closing out the week with another round of Fed speak, because we did not get enough, from Harker, Jefferson, Cook, and Bowman. This was Countdown to the Open. This is Bloomberg.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
No one covers the world like Bloomberg.
Because Trussonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify
quantify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees. But for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning 1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack.